up. I think what's interesting about the dynamic and what's reflected in FX is we've moved from a world where in the last 2-3 months we've been worried about a U.S.-led global recession to now one where the combination of European problems with energy and China weakening is now the more significant problem.
Dr. Kasman, I know you were like me in the basement with your Gilbert chem set long ago. There was logwood and all those other little chemistry things we made. Your Gilbert chem set right now is Japan. They are failing in a theory that keeps getting tested and tested by the market. When does their theory of limiting through bond illiquidity the rate rise, when does that end?
Well, I think the story in Japan is interesting because the continued purchases of assets is probably counterproductive at this point and unsustainable. Yeah. But the dynamic of the Bank of Japan letting the inflation story run through, trying to establish a more sustainable rise in inflation makes sense. I think the problem in Japan is they're getting stuck in this mode of saying that they continue to need to buy assets, keep interest rates pegged close to zero in a world in which the dynamics are really requiring something different. I would like to see them move away from YCC targets as tight as they are, but keep policy rates unchanged to continue to keep the inflationary dynamic moving through the system there in a way that they certainly need.
Well, Bruce, Japan's an island of its own, both physically as well as for monetary policy. The rest of the world is hiking rates into weakness. And we are seeing that with the Federal Reserve to a lesser degree, but to a bigger degree, the ECB, which is expected to raise rates by 75 basis points on Thursday. How much are we looking at both the fiscal and the monetary impulse working against each other and creating a whole lot of pain that we're not pricing in?
Well, it's an interesting question. I think the ECB needs to get policy rates towards neutral in a world in which they certainly have recession risk, but they also have fairly significant inflation concerns. Keeping policy rates at zero don't make sense. We think they're going to move 75 basis points. You know, as you're noting, the fiscal policy in Europe, and by the way, Europe and China are both moving in the other direction, supporting growth. I think this is the right thing to do against the backdrop of what is a huge hit to household and in some cases business incomes. But the consequences of that are, we believe that the ECB is going to move policy rates up to something like 1.5%, even as the European economy suffers as we go through this winter.
1.5% by the end of this year, you're saying, Bruce?
That's correct, yeah.
So let's talk about what kind of downturn we're expecting from that. If there is the fiscal support that's helping to support the economy, but there needs to be, according to certain economic theory, some sort of deceleration activity in order to bring inflation under control. What kind of deceleration is required both European-wise as well as in the U.S. to bring inflation back to something more like the target for central banks?
I think that's the rub here, which is to say that if we avoid the very damaging recession dynamic in which labor markets weaken a lot, the combination of tight labor markets, salience, which is changing wage and price setting process, and some things that are happening in the global economy that are not going to return to normal, suggests to us that you're going to get inflation down quite a bit here, but you're not going to get it down enough. So I don't think a move up back to 7% unemployment in the euro area, which is our forecast with a mild recession. I don't think a move up to 4% inflation, unemployment rates, in the U.S. are going to be enough to do the job. And I think central banks are starting to understand that. They're not there yet, but over time, I think part of the problem we have is we're going to need much more significant adjustments in labor markets to contain inflation.
Then with that said, Brad, Dr. Kasman, with that said, very, very important here, where does it become more difficult for central bankers? One of my problems is everybody's stressed out about the now, and I'm like, wait a minute, the now is not the point. Where out there is where the stress really comes in for monetary decision? Is it this year, next year?
Well, I think it comes when policy stances are restrictive and labor markets are turning soft. And that's, I think one of the interesting things in the U.S. right now, last Friday's report doesn't suggest to us that the labor market is soft at this point. So the Fed doesn't have a really difficult choice continuing to move. But once you get policy into a restrictive stance, which the ECB is far away from, but the Fed is starting to move towards, and you start to see the effects of tight monetary policy and other things weaken labor markets, that's when the choices become more difficult. We're not there yet for the Fed in terms of the labor market. We're not there yet for the ECB in terms of policy stance. I think we get there sometime early next year, and that's when I think you're going to have more interesting choices to be made, more difficult choices to be made. We do think the Fed is going to stop somewhere close to 4, and we think the ECB is going to stop somewhere close to 1.5 to take stock of what they've done against softening economies.
So, Bruce, let's put some numbers on this. What kind of unemployment rate are you expecting that is required to bring inflation under control in the European region as well as in the United States?
Well, let's just be careful here. I think a move from what has been something like 9% inflation over the last year down to 4 or 5, that's going to happen with energy markets normalizing, with the slowing we've seen in global growth, taking goods pressures off. I think you get that pretty much without having to do anything. The question is getting back down to 2. And I think in that context, I would argue that you need to probably push the U.S. unemployment rate up above 5% and probably push the euro area unemployment rate up towards 8% at minimums. And that's not going to happen without something that we would naturally call a retrenchment or recession of more magnitude than what we're forecasting and most others are.
Short and shallow doesn't fit in there, does it, Bruce? When they sort of short and shallow recessions.
It doesn't. First of all, that's hard to achieve. Let's just to gradually move the U.S. unemployment rate up to 4% is something which would be hard to do, not by any means impossible. But yeah, I think to get the inflation picture back in the bottle with a 4% unemployment rate, a very mild subpar growth phase, that's not what history suggests can really do the job. Recognizing getting down from 9 is easy. You know, getting from 9 to 4 or 5, I think that's a done deal. Just given where energy prices are, given what's happening in global manufacturing.
Bruce Kasman, thank you, Bruce. Really thoughtful stuff from JP Morgan. Lisa, the other additional thought I think that I've got and others have too is whether this is more than a one-year thing, more than one winter, particularly in Europe, and that's been floated by politicians in Europe now. I think lately the Shell CEO, Ben van Beurden, talked about the prospect of that as well. What if this is 5 winters, maybe longer, and that's a big, big problem?
If they have to completely rejigger their energy grid, that is going to be a huge challenge, especially with a lot of disagreement over how to do that, right? I mean, there's this question about nuclear power and Germany possibly delaying the roll-off of some of those plants. There's a question about coal, right? It had been left for dead as dirty energy. Now coal prices are surging to the highest on record in Europe because people are bringing it back. How do you rejigger a grid in an era where you're still trying to be aware of environmental concerns?
Another reason why so many people are bearish, Tom, and I go back to that Ben Laidler conversation we started the hour with just about 40 minutes ago, Tom. Can you be bullish right now? And he said, I think you've answered your own question. Everyone's bearish, so maybe you can be.
Yeah, there's a lot of gloom out there. Another bull John Stolfus just publishes, and he talks about the worry. John, the projections that are out, the negative projections. Bramo is negative projections this morning.
Negative projections, just this morning.
Negative projections.
Just this morning.
It's constant state.
Negative projection, John, is where you go, get out of bed. You have to go to school.
Futures up 8 cents at 1% from New York City.
Negative
Is that what
projection.
you're doing this morning?
Get out of bed now.
Keeping you up to date with news from around the world with the first word, I'm Rishika Gupta. The U.S. Justice Department is deciding what to do next in the case of those documents taken from Donald Trump's home. A federal judge has granted the former president's request that a special master, a neutral third party, be appointed to review the documents. The judge also temporarily blocked the U.S. from using the documents in its criminal investigation. The Justice Department hasn't said whether it will appeal. The Prime Minister of Ukraine is confident that European leaders will keep sanctions on Russia despite the turmoil they face in the energy markets. He spoke with Bloomberg's Maria Tadeo in Brussels.
We can see absolute understanding from European leaders that we are in a hybrid war. We have absolute understanding that Russia is blackmailing European politicians, and we have absolutely assurement from European politics that they will stay with Ukraine till the win.
The Prime Minister also said Ukraine's allies should do what they can to help end the war quickly, since Moscow is willing to keep fighting for a long period. And in the UK, incoming Prime Minister Liz Truss has drafted plans to freeze energy bills for British households at or below the current level. According to documents seen by Bloomberg, the freeze could cost as much as $150 billion over the next 18 months. Trust is also planning a $46 billion support package to lower energy bills for businesses. Global News 24 hours a day, on air and on Bloomberg Quick Tape, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
When you think space, you probably think one space agency that travels under the radar is ESA, which is surprising considering what the European Space Agency has achieved and how vital it is to the global space industry.
We've collaborated with pretty much everybody who is involved in space exploration.
But ESA wants to be a leading force in furthering humanity's mission into space.
Commander Ground, do you copy? Copy.
If we want to have successful human missions to Mars, we are going to have to learn to live and work off-world in a different way. The place where we are going to learn to do that is on the moon.
Can ESA help humanity take its next giant leap?
The markets are preparing to close, but the day is not over yet.
Stock that is now up about 45%.
A lot of volatility right now.
You need the power of the Bloomberg terminal to get you market-moving data before anyone else.
These numbers are much higher than expected.
Upgraded today to overweight.
You need top analysts to bring you exclusive global insight into cross-asset markets.
The muni bond market.
China is a really big focus.
Bitcoin ain't playing along today.
It's going to be short-term.
Bloomberg Markets, The Close. Weekdays on Bloomberg.
When I started, I had no idea it was going to turn into this, which is a tracksuit empire. I don't have any investors. All this is all money in. This is me going out and hustling, bringing that money back, and just building it, building it, building it. You gotta think about a person that was homeless at one point, didn't really have any money coming in. The fact that this person was relentless and just determined to succeed and not let rock bottom define him as an individual. I can take things and put them together and take them apart and make them better and put them back together. I respect the craft, so I don't want to minimize and disrespect the value of each step of the craft and do by machine what should be done by hand.
The best case for consumers at the moment is really sad to say, is pulling back on consumption, conserving. They're doing it because high prices tend to do that. But there's no way that there can be a replacement of the lost Russian gas in Europe without there being phenomenal drop in demand.
That's the big problem, the unique problem the Europeans have right now. That was Ed Moss of Citigroup. From New York City this morning, good morning with Tom Keene and Lisa Abramowitz. I'm Jonathan Ferro. Futures bouncing back 0.75% on the S&P 500. On the Nasdaq 100, bouncing back 0.8% after 3 weeks of losses. Yields up a little bit as well, TK, up 4 basis points. Your 10-year, 322.92.
Right now we're going to look at commodities. I'm walking through those prices that John's talking about, the political tensions in Europe, and I guess there's a little bit of a rollover, but it's really nothing to write home about. The tensions exist in hydrocarbons. They also exist around the world, and what's important into September is what has not happened, which is food inflation has actually subsided worldwide. She is expert on food inflation. We'll talk to her, of course, about the hydrocarbon story as well. Kona Hake, head of research at ED&F. Man, Kona, honored to have you on, and particularly about what has not happened, which is food inflation. Wheat, corn, rice did not take off worldwide. Is there still a risk that we could see food inflation in those emerging market core commodities?
So the peak was in March, straight after the Ukraine invasion. And I think, as with all food commodities, high price is always the cure for high prices. Literally, we saw a ramp up of exports from all origins, and that did provide some short-term supply relief. Now, we did fall too soon, too sharp, straight after the harvest started to come along. But August was we did see some supply risks. I mean, I think the huge and unprecedented droughts we saw in the US Midwest, in Europe, these 500-year-old droughts. I mean, that definitely caused some damage, and we did see some spike in some of the grains in August. But now I think what you're seeing is probably the risk period is probably behind us now. So I feel like food inflation is now it's abating a little bit. But by the time it gets to emerging markets, I think when you look at the supply chain issues, freight, and the rate at which the middlemen pass that cost on, I think you will see a slower in food inflation, but not terrible right now. It's not looking as bad as it was 5 months ago.
Dovetail your Brent call, whatever your Brent call is, into where it really matters for the rest of your commodity analysis, food inflation. Those 2 points, is it 120 a barrel? Are we there right now? Where does Brent become germane for food inflation?
The food inflation link with crude oil, energy, gas, you name it, it's huge. Right now, fertilizer costs, which is so important to provide the next crop's sustainability, is hugely reliant on gas prices. So we're seeing today fertilizer plants being shut down because they can't afford the gas prices. So that's going to have an impact on next year's crop for sure. But shorter term, yes, energy drives the tractors, the fuel cost, the cost of bringing the Brazilian corn crop all the way to the ports. This requires diesel. So energy at $90 per barrel is still very, very significant. And I think it is therefore, it's not likely that food prices are going to go all the way to the bottom like it was maybe 3 years ago. We're definitely plateaued. We're coming off, but we're not going to go rocketing down because we have underlying cost pressures that are going to keep prices slightly high.
So, Kona, this really highlights how important the energy story is to everything, right? And underpinning this sort of inflationary tilt across the board. There was a report out from Goldman Sachs this morning, or over the weekend, I should say, saying that energy bills for European households may surge by 2 trillion euros at their peak to account for about 15% of Europe's GDP. At what point are we looking at something that is one winter versus 2 versus 3 that feels a lot longer because of the difficulties in readjusting the grid?
Oh my God, it's a nightmare. I do think, obviously, the governments will do what they can to make sure it's stuck to one winter. So this one is going to be the most severe. They're on track to build their storage levels, so Germany at least is there, but I think the Nord Stream outage is going to pose some risks there. The fact of the matter is they can't afford another winter like this. It's simply impossible to politically be allowing that to happen. So they're going to have to invest in supply, alternative supplies, whether it's renewable, whether it's nuclear. I know nothing of that is immediate and nothing's going to be fast. It's going to have to be a combination of demand destruction. But demand destruction is also politically unpalatable because it essentially means you need to create a recession. So it's not going to be easy, but I can't see next year being as intense as this year will be.
So, Kona, where is the peripheral supply coming from? You talked about nuclear. There's so much pushback to that, even just keeping some of the nuclear plants open in Germany. You talk about coal. Well, that really flies in the face of a lot of ESG requirements. Where is it coming from? How active have European leaders been in sourcing some of these energy?
Well, they haven't been. They've been sleeping, and I think this has been a massive wake-up call for them. So, look at our new Prime Minister in the UK, Liz Truss. All the ESG concerns seem to be going out the window. She's going for, she's kind of going for nuclear, but she's also going for all the fossil fuels are all back up and running. So support is there, but in tandem with renewables, to be fair. But they want everything now, and nothing's going to happen now, and not when government budgets are so stretched. I mean, I just don't know where it's going to come from. And if you're going to windfall tax the energy sector, I think that's going to further deter supply-side investment. So it's incredibly challenging.
Kona Hack of ED&F Man. Kona, one of the best. Just great to catch up with you, as always. Kona, thank you. Lisa, this is the number one question, I think, for this program for the next number of months now. We're about to put together a massive fiscal effort in Europe, and we're all asking the same question. Is the bond market wide open to finance it?
And what happens if it's not? And what happens if you start to get yields surging after decades of yields being so low, companies financing themselves in that type of environment as well as governments? And what do you do at a time when central banks have to raise rates to punitive degrees in order to keep inflation under control? It's mind-spinning. This is a new era, and it is one of the most pressing concerns facing us over the next few months, if not years.
I've said this a few times, but in the pandemic, Tom, we had low inflation, we were cutting rates, we had QE. Now we have high inflation, we're raising rates, and we have QT. It's a very different backdrop for this bond market to stomach the kind of fiscal relief these governments are trying to provide.
What I would suggest, John, it was a medical war. It was an intangible against a pandemic, a huge impact. This is an actual war with tangible commodity changes, which you see in every war, quite frankly. I would suggest that the fiscal expansion, which one number I saw was 8% of GDP in the United Kingdom, which is stunning statistic. John, it's always the same story. It gets fixed, the issuance of paper, of gilts or whatever, pick the country, and then you see it in inflation, and you always see it in foreign exchange.
The currency weaker, yields higher. It's been the story of the last month for the Europeans, for the Brits as well. Futures right now up 27 on the S&P, up 0.7%. If you're just tuning in after the long weekend, we bounced back on the Nasdaq, up 0.75% on the Nasdaq 100. 3 weeks of losses, though. Can we put together a week of gains? Going into an ECB meeting this Thursday, looking for potentially something like a 75 basis point hike, a 50 basis point hike. Chairman Powell actually speaking on the same morning. So we'll hear from him on Thursday. What's that about, Bramo?
I have no idea.
Scheduling Chairman Powell with an ECB anyway, from New York City. Let's see if that changes. This is Bloomberg.
Apple's delaying its next major iPad software update, iPadOS 16, by about a month from September to October. Apple made the decision for a number of reasons, including a still buggy Stage Manager multitasking interface and in order to link the launch closer to the more similar macOS Ventura. Still, it's an unusual move. Since shifting the launches to the fall in 2011, Apple has released its new iPhone and iPad software updates simultaneously each year around September. By staggering the releases, users may find some issues around compatibility with cross-device features like retracting and editing messages in iMessage, the new shared iCloud photo library, and the new feature for transferring FaceTime calls between iPhones and iPads. It will also make it a bit harder for developers to launch apps that run on both the iPad and iPhone that require new APIs and features found across iPadOS 16 and iOS 16. Regardless, it was still, of course, the right move. Stage Manager on iPadOS 16 is still quite buggy, I don't find it particularly intuitive, and it's not compatible with most iPads and many third-party apps on the App Store. The feature clearly needs some more polish. And complaints from consumers about Stage Manager will now no longer probably overshadow the earlier launch of the iPhone 14.
Markets count down in Europe. From the financial centers of the world, Bloomberg Markets European Close with Guy Johnson in London and Alex Steele in New York. Real-time numbers, real-time analysis. Weekdays.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
From the world of politics to the world of business. Balance of Power with David Weston. News, analysis, insight from and about politics power players. Weekdays. This is Bloomberg.
Unfortunately, good news in the labor market can be bad news because the Fed will have to respond more.
This isn't really going to significantly change the trajectory of the Fed.
We've heard from the Fed that we are likely to be higher and tighter for longer.
That was the core messaging from Jackson Hole. There will not be rate cuts in 2023.
I think the Fed's telling us there's going to be pain.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
Live from New York City for our audience worldwide. Good morning, good morning. This is Bloomberg Surveillance on TV and radio. Alongside Tom Keene and Lisa Abramowitz, I'm Jonathan Farrow. Futures bouncing back up 0.7% on the S&P. TK and the NASDAQ up 0.75%.
Equity lift in the United States, VIX to 25.58 gets my attention as well. But John, this is a global Tuesday, and the global Tuesday is currencies in revolt. They're the litmus paper of the system, and they're screaming monetary and particularly fiscal stress.
Fiscal relief is the big topic of discussion over in Europe, Tom. 130 billion potentially from Liz Truss, the incoming Prime Minister, for consumers, then 40 billion potentially to help small businesses. Tom, that's 170 billion sterling. That's a lot of money in the UK.
One of the ratios, yeah.
Question of the morning, can this bond market finance it?
But the answer is yes. They can always finance it. In every single war, without question, it gets financed. It's what happens after that. And that's a question, John, of United Kingdom productivity, obviously under the new gaze of Brexit here. If they have to go out on a 10-year plan, what is the productivity of the nation on a goods-producing and particularly service sector side?
Lisa, at what price? How high does that yield need to go? How much weaker does that currency need to get?
And how unsustainable is that potential price or that potential rate for a market, for a global economy that has taken on so much debt? And this is the difference. This is the distinction between now and previous bouts where there needed to be some borrowing to pay for a war, to pay for a pandemic. We are looking at economies that have already tacked on so much debt that it becomes perhaps a different bill in a different order of magnitude than perhaps we've seen in the past.
Quote of the morning comes from Mike Wilson over at Morgan Stanley to kick off your trading week with a bearish tilt. You might hear from Marko Klanovic of JP Morgan a little bit later. I'll bring you that quote if we do. Mike Wilson says this on his earnings forecast cuts. We think the next several quarters will end up containing some of the most significant downward revisions to forward EPS forecasts we have seen in the past several cycles. That is a big call, Lisa from Mike Wilson, looking for downside, minimum downside of this equity market, 3,400 on the S&P, which he thinks is going to come in 4Q.
Yeah, and what we're looking at is someone who has been bearish consistently, and some people might say, well, he's an uber bear, and yet he's getting more bearish as time goes on, not less, even as the rest of the world kind of hews to his predictions at a time when there has been a worst case that has been borne out in several fronts. We haven't even talked about China and the escalating lockdowns there, just continuing this feeling of global recession.
Worst case at the start of the year has become the base case in the middle of the year. Question we're all trying to ask, Tom, is how much worse can it get? And is it time to lean the other way? Is it time to lean in the other direction?
Well, yeah, John, and I'm doing the math here while your guys are going on with the doom and the gloom, and it's real simple. Mike Wilson is modeling SPX down 14%. I mean, John, that's the kind of big, bold move that is, and that is the mood that's out there right now.
And that number could be even lower, Tom, if we get some kind of deep recession. I'll go through the numbers from Mike a little bit later. Futures right now up 0.75% on the Nasdaq 100, on the S&P 500 up 0.7%. Yields higher by 4 or 5 basis points on a 10-year, 323.30 on a 10-year. Crude a little bit lower, down 0.5%, 86.42. The FX market all over the place. This Tuesday, I have to say, a bit of calm for euro dollar. Unchanged, Bramo, 99.32.
Yeah, but the dollar index, DXY, definitely creeping up as there is this feeling that the dollar continues to be the haven as the rest of the world reels in a series of crises. Over in Europe, it's very much an energy crisis. And with the UK, Liz Truss is going to be delivering a speech today. We're expecting probably around 11:30 Eastern time from 10 Downing Street. Perhaps we'll get some more details on this plan that she has to support households as you do see energy bills poised to climb significantly. How do you freeze them where they are? How does this translate into the British pound versus the dollar? And John, we've been talking about this, and I know that, Tom, you were pointing this out. Calls now for parity, not of the euro, but of the pound with the dollar, as there does have to be this relief mechanism in order to really finance the increased budget deficit to deal with this crisis. Today, the U.S. Senate is returning after Labor Day, although talking with Joe Matthew, it sounds like perhaps they haven't really returned yet, considering the quiet after the Labor Day holiday in the United States. We are still looking at oil prices, at gasoline prices going down. And I will just know we are seeing crude prices go down, too, even after OPEC Plus said that they were going to cut supply. This is a real question about demand, right? If you're cutting supply and you still see prices go down, how much is this a statement about a deceleration in economic activity that you're seeing around the world? And how much does this really support or feed into the Mike Wilson call of lower margins, lower earnings ahead? And at 10 a.m., we get some sense of the U.S. services sector with the ISM index for the month of August getting released. There is an expectation it could fall to lows not seen since the heart of the pandemic. At what point, John, do we need services to get back in order to get the economy in the United States with enough momentum to move away from the gloom and doom in the rest of the world?
Elisa, if the Senate's back, does AMH come back?
I think that she is coming back.
She's actually going to return.
Yes, I think that we're going to hear from her tomorrow.
Was there a sighting?
She's been gone about a month, Tom. I haven't seen her for a long, long time.
Lisa and AMH,
I don't begrudge vacation.
Wow.
I've got 142 days left for the end of the year.
Work it out, TK.
I am.
This show's gone European.
Taking off November.
In more ways than one. Troy Gayeski joins us now, Chief Market Strategist at FS Investments. Troy, you ask yourself your own questions in your notes, I noticed, so I'll read some of them out. Did you take advantage of the recent nonsensical bear market rally to lighten up on equity risk? Did you use the recent decline in bond yields to lighten up on duration? Troy, did you?
Yeah, so basically, depending on the strategy, we layered in some more defensive calls that we sold. In other cases, more importantly, we sized up our basis short, which is short pass-throughs and long treasuries, because that effectively had round-tripped. It came in the year at extreme tights. We knew the Fed was going to be winding down their balance sheet. Spreads gapped wide with the first 6 months of the year, and we were able to reload that trade into weakness. So that's worked out fairly well for us the last several weeks.
Troy, as a gentleman from MIT, it's good to see you with the engineering physics of inertia. What is the inertia, right? You say you're fighting inertia. What is the inertia now that you're fighting in the equity markets?
Well, I think more broadly, the reason we use the term inertia is we've been a little shocked at how much inertia there's been this year for asset allocation. I mean, it was fairly obvious coming into the year that the Fed would tighten. Now, like Lisa was saying before, obviously things have gotten even worse than we thought with the Russian invasion of Ukraine, China's COVID-0 policies, and much higher inflation that's forcing the Fed to tighten. But the concept of inertia is things have been so good for so long, Tom, as people have been bailed out time after time by central bank balance sheet expansion, that there's been very little movement to get more defensive this year in client portfolios, despite what was obviously going to be a more challenging environment for 60-40 than we've had over the past 12 to 13, and moreover, the past 20 to 40 years, depending on your time horizon.
So, Troy, when will you know that the bottom has been reached? When will you know that the pessimism has been really priced in and that we have moved away from the inertial momentum that we have seen over the past few months?
Well, so one of the differences between this downturn and most of the downturns we've had the last 13 years since quantitative easing came about is it's going to be much harder to identify a viable bottom, right? During the pandemic, for instance, obviously once the Fed flooded the zone with liquidity and fiscal stimulus showed up, you were fairly certain that the bottom was in and you could buy aggressively. If you go back to 15, 16, once Yellen decided to only hike once, then, of course, in the GFC, there were multiple tests. So it's going to be much harder to identify a viable bottom. That being said, at some point when you get the S&P in that 13 to 15 times forward earnings, and there's light at the end of the tunnel for inflation achieving a 2 to 3%, which probably won't be till the end of 23 at the soonest, that's the time you probably want to start nibbling back. Until then, you want to be in the northwest quadrant, the efficient frontier. You want to protect capital, grind out a mid-single digit to low, high single digit return in order to protect capital and eke out something that's much more modest compared to what all of us enjoyed from the bear market bottom at the end of the GFC.
And Troy, if you had to take a bet right now on who cuts rates first, is it the Fed or the ECB?
ECB. Yeah, it's just unfortunately the weakness in their economy is already very clear and present. In the U.S., we still have much more labor market shock and obviously aren't getting hit nearly as hard on the energy costs, particularly natural gas. So, the ECB obviously in the near term is going to tighten, but it's highly, highly unlikely that the Eurozone can avoid a recession in the near term. In the U.S., recession risk is certainly elevated compared to 3 to 6 months ago, but that's over more of a 6 to 12-month time horizon because the labor market, as you know, still stays remarkably resilient in the face of global weakness.
Troy, this is what Wei Li of BlackRock told our colleagues here at Bloomberg on Europe. Compared to expectations at the beginning of the year, this is pretty close to the worst outcome. Most people on board with that, Troy. From your perspective, and you answered this looking at the United States, try and answer this looking at Europe. When do you start to lean the other way against some of this gloom around Europe? Because I'm not sure how much it gets much worse than this right now.
Yeah, it's a great question, John. I think it's very dangerous to step in front of trends that are this powerful, right? When you think of all the various drivers of this, whether it's interest rate differentials, growth differentials, just trend following technical behavior, the massive energy shock, mean reversion systems can start nibbling, and I would recommend going through quantitative systems that are very disciplined. But in the meanwhile, there are so many other things to do, whether it's senior secured commercial real estate debt or low beta multi-strategy funds. Stepping in front of a freight train can be a very painful exercise as a discretionary manager. The old adage is the trend is your friend, right? And you might not want to try to fight it too hard at this stage of a market cycle.
This is a bearish freight train in a big, big way. And I've asked a few times over the last couple of months how much worse it could get for Europe, and it keeps getting worse. Troy, thank you. Troy Gajewski of FS Investments. Where we are now compared to where we were at the start of the year, greatest example of that for me is the Federal Reserve. At the December meeting, when they put out the forecast for this year for Fed funds year-end, 90 basis points. That was year-end on Fed funds. That was the central forecast. In the last projection from June, that was 340. And we'll see what that is when we get the September projections in a couple of weeks' time. But, Lisa, it gives you an idea of how much has changed between the start of the year and where we are currently.
The end of the year, the projection is for a close to a 4% interest rate in the United States.
From 90 basis points.
Yes, there you go.
The December forecast to maybe a 4 handle on Fed funds. Futures up 0.75% from New York City this morning. Good morning to you all after a long weekend stateside. This is Bloomberg.
Keeping you up to date with news from around the world with the first word, I'm Ritika Gupta. Liz Truss officially becomes the UK's next Prime Minister today after winning the Conservative Party's leadership contest, and she's drafting plans to aid households and businesses with their soaring energy bills. The proposals could cost close to $200 billion. The Justice Department is considering whether to appeal a judge's decision regarding documents seized from Donald Trump's home in Florida. The judge has granted the former president's request to have a special master, a neutral third party, review the papers. The judge, who was appointed during the Trump administration, also temporarily blocked the government from using the documents in its criminal investigation. Russia may face a longer and deeper recession as the impact of U.S. and European sanctions spreads. Bloomberg has viewed an internal report prepared for the Russian government. 2 of the 3 scenarios in the report show a contraction accelerating next year. They see the economy returning to the pre-war level only at the end of the decade or later. And California has narrowly avoided having to impose rotating power blackouts due to a heat wave. Still, officials warn that the state's power grid faces an even bigger test today. Power demand could reach an all-time high as businesses and schools reopen after the long Labor Day weekend. The drugstore chain CVS keeps expanding beyond its retail origins. The company has reached a deal to buy home health and technology services provider Signify Health for about $8 billion in cash. Other bidders included Amazon and United Health. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
What are the biggest challenges for General Dynamics and what are the biggest opportunities?
So I think in any business, the challenges are solving complex problems that come to you. You know, the problems that come to me and my senior leadership team for resolving tend to be highly complex and nettlesome. So your ability to solve those complex problems are an important element, I think, of the value that we add to the company. And then I think opportunities, you always want to make sure that you've got a creative enough mind, an open enough mind to be able to see around square corners. What am I missing? You know, the why questions are really powerful. Why are we not doing this, or why are we doing this? I ask those questions a lot, and in the answers, you can sometimes tease out some real opportunities, some hidden things. But thinking creatively about opportunities and problems is really important.
And what about the industry generally? Do you think they have big challenges now as the defense budget probably comes down a bit?
So I think that we are all responsible and we have an obligation to find the latest and best technologies that we can for our customers and deliver them in the most cost-effective manner we can. And I think that that's a challenge and an opportunity for all of the big defense companies.
The difference between endless research and a winning strategy. To improve your firm's productivity and profitability, Bloomberg Law combines the latest in AI-powered tools and in-depth analysis to accelerate the research process. To grow your practice and make better use of your valuable time. The difference is Bloomberg Law.
No one covers the world like Bloomberg.
We have to get interest rates higher and bring inflation back to our target.
33 million people have been affected by this flooding in the monsoon.
Disruption is the whole point of a strike.
With unmatched reach and resources from more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, your global business authority. When U.S. jobs numbers are released,
numbers are pretty much in line with what Wall Street expected.
Bloomberg brings you crucial data at terminal speed.
315,000 jobs created an optimistic number for the Federal Reserve.
And instant expert analysis.
Dare I say that this might be called a Goldilocks jobs report?
What this does is really push away a lot of the arch gloom.
Maybe leading us toward a soft landing. The Fed is still going to be debating 50 or 75 basis points.
Nobody covers jobs day like Bloomberg, your global business authority.
We have and will continue to have that economic strength to give people the cash they need to get through this energy crisis. And I know that Liz Truss and this compassionate Conservative government will do everything we can to get people through this crisis.
We can all agree on the word choice there, crisis. It is one. That was the outgoing Prime Minister Boris Johnson in the UK, the incoming Prime Minister Liz Truss. We'll hear from her, no doubt, a little bit later. From New York City this morning, good morning with Tom Keene and Lisa Abramowitz. I'm Jonathan Ferro. Futures up 0.7%. We bounced back on the S&P, on the Nasdaq 100, up 0.7% also. Yields are higher by 5 or 6 basis points now, getting closer to 325 on a 10-year, 324.43. And in the FX market, for once, a bit of calm on euro dollar, basically unchanged, Tom, 99.34.
Right. John, what do prime ministers do in the United Kingdom when they retire, are out, etc.? Like, what did Churchill do?
They can carry on being members of Parliament. I believe Theresa May is still in Parliament right now.
Yeah,
Tom.
okay.
So
they go back to Congress. We don't do that, but they go back to Congress.
Well, that's because you're an MP, Tom, and then you become the leader of the party and you become the prime minister if your party's in control.
They
sure.
Go back to Congress.
Although not quite. Are we going to go over that whole system versus system thing?
No, I just think it's very cool that, like, he could go back and be
a
House of Representatives or Senator or whatever.
Because he's still an MP, Tom.
I think,
I'm not doing this.
John, are we getting rid of VAR in the Premier League? I think.
Would you like it? Going to make some mistakes over the weekend, Tom? Yeah.
It's like
they've got to fix this. I agree.
Okay, thank you. We agree on something. We can move forward now with Joe Matthew in Washington. Bloomberg's Joe Matthew, of course, with a sterling radio program. Joe, a missile just launched by Agnanovich, Hood, and Wilkins, describing the folly known as the budget process in modern Washington. It used to be there was an appropriations committee for fiscal year 2023. They have like 12 or 21 bills, whatever. Yep. They've passed exactly 0. Our budget system is broken, isn't it? So what's happens this week?
More kicking of the can, I guess you're right. You're supposed to have the 12 appropriations bills. I can hear our friend Rick Davis somewhere screaming regular order as we have this conversation. This is the kind of stuff that really irks lawmakers who've been around for a minute. There are lawmakers on Capitol Hill, though, who've been in town for a couple of years that have never seen an actual budget in the traditional sense, at least. Lawmakers are coming back now, Tom, and I think this is where you're going. They need to craft a spending plan. The government runs out of money at the end of September. They will likely kick the can with a so-called continuing resolution, bring us to mid-December. The question is, what are they attached to that bill? And that's a big part of the conversation this morning in Washington.
I look, Joe, at the process here, and it seems to be just horse trading. Is that all this is at the end of the day? Is the leaders doing the legislation and not chairmen or committees?
I think that's exactly right. That's a pretty good description. I might steal that.
Okay.
Yeah, indeed, you passed the test, in the wonk test in Washington. The question is, though, how about some of the other pieces of legislation, that we're talking about here with regard particularly to same-sex marriage? That could be attached to a spending bill. That's going to irk some lawmakers and could lead to a much more concerted debate that's going on here in Washington. The House will be back next week, and that's when it gets real.
Joe, where is the ESG agenda for this administration and their budget, especially considering the energy independence desire for this nation, the fact that coal is going gangbusters in Europe, and oil prices have been climbing, have come off a little bit, but still very much in the forefront?
This is a really complicated scenario for this White House, Lisa, and I'm not sure exactly how to answer it because prices are driving everything. And as you well know, if you look at Joe Biden's approval ratings, they are tracking the price of gas very closely, an inverse relationship, almost like nothing else matters right now. So while the White House is celebrating 80 days or whatever it is of lower gas prices, you know, they start talking about the ESG program, climate change in the most recent bill that was passed, the infrastructure, I should say, Inflation Reduction Act. Some of them start to sound the same after a while. The question is, how do we get through winter? Yes, we're going to have, obviously, a climate agenda here at the White House, but it's blunted by reality. Just like the Europeans are worried about winter, we are as well. And by the way, we're worried about the rest of the summer. This is going to be the biggest drain on the electric grid in California history today. The heat wave that has engulfed the West has created a massive demand for energy, and it does run counter to what the White House is trying to do here. Even when Elon Musk talks about this is the man behind, of course, the most successful electric car company. He says we need more gas now, even as we continue to press forward with our climate change initiatives. You can't have one without the other.
Joe, how much conviction is there, how much support is there in Washington to support Europe to increase some of the gas exports to the region?
That's also going to be driven by, I think, the reality. It's kind of a game day call. I asked 3 members of the White House economic team over the course of last week about this. Specifically, do we have the spare capacity to help? And the answer is very vague. We'll do whatever we can, but of course we have our own needs here at home. The news from OPEC right now would challenge this as well just a little bit as the White House issues a statement saying that it's still going to do whatever it can to bring down the price of oil. Sharing with other nations may or may not be part of that.
Joe Matthew, thank you. So much to discuss after the long weekend.
Yeah.
Joe down in D.C. on Sound on Bloomberg Radio, weekdays at 5 p.m. Eastern Time. Futures right now, Tom, on the S&P, up, let's call it 0.6%.
Watching yen, number one thing I'm watching, John. Yen creeps away to new weakness. This is stunning. Back, I believe, to 1998. We're nearing a 142 on yen. That is just absolutely jaw-dropping.
It's not working, is it, Tom? Now, typically, in a world like the one we're in right now, one of the big trades would be you take something with a high beta to global growth, you get long the yen against that currency, Tom, and that's not working out. I mean, take a look at the chart of Aussie yen as a great example of how it's not working out.
Today. I've looked at it twice today. It's buttressed up. It's strong Aussie, weak yen, and you know, you never, John. One thing I would say, this is really important. You can think as hard as you want. And when you got multi-currency systems, you never know which one's going to give way.
Well, one thing we do know,
huge humility about that,
based on Jackson Hole, is that the ECB is willing to keep on hiking rates and tolerate a recession.
Until the facts change.
That the Federal Reserve is willing to keep on hiking rates and maybe tolerate the same. And Lisa, the BOJ has no interest in doing any of those things right now.
Well, and they're doubling down on that. Tom, go ahead.
No, I just think when the facts change, they'll amend those theories.
You'd expect the yen to snap in the other way, Tom?
I don't know what I expect other than I love this phrase from Bullard, Lisa, front-loading.
Well, there have been a number of theories that until the dollar weakens, it's going to be tough for the Bank of Japan to move away from some of their prognostications on their own terms, which is what they really want to do.
Futures right now up 24, up 0.6% on the S&P, and the Nasdaq 100 up 0.7%. Yields higher 7 basis points, 325.57, counting it down to an ECB rate decision this Thursday. And another address from Chairman Powell later this week as well. From New York, this is Bloomberg.
If you do any kind of business in this country, there's a pretty good chance that you're going to see that business registered in Delaware. Why? Because that's where you do it. And our point was Wyoming can be that venue for blockchain enterprise, for crypto.
It's not the Wyoming way to sit around and wait for change. We want that independence, we want that freedom, we want that individuality. And that's a common theme that brings together bipartisan support for this in Wyoming.
We want to make sure that people understand, especially in Wyoming, but as the United States as a whole, this trend is coming. It's not going to stop. This is more of a small town that's growing into what I would call the cryptocurrency version of Silicon Valley.
It's the philosophy of that rugged individualism, the independence, and the ability to really get things done for yourself and control your own destiny. You get that from a blockchain, and you don't get that without it.
The future of the entertainment business. Where do you think it's going? You think there's going to be movie theaters forever?
Anybody that says to you, and I won't name names, that says the movie business is over, are fools.
The markets count down in Europe from the financial centers of the world. Bloomberg Markets European Close with Guy Johnson in London and Alex Steele in New York. Real-time numbers, real-time analysis. Weekdays.
Live from New York City this morning. Good morning. After 3 weeks of losses on the S&P 500, just a small bounce back relative to the losses we've seen. Up about 0.6% on the S&P. On the Nasdaq 100, up 0.5%. Talked a lot about Mike Wilson over at Morgan Stanley, cutting his earnings forecast through 2023, looking for some significant revisions, and still says we have not seen the lows of this bear market. Says they're somewhere in and around 3,400 at a minimum, and we could see that in 4Q. That's the equity picture. Here's the bond market story. Yields lower on Friday off the back of a payrolls report that a lot of people said had that Goldilocks feel to it. Participation up, unemployment higher, wages a little softer, and still some robust payrolls growth. I can tell you, we took out some work from the front end of the yield curve on Friday. We had it back in this morning, up 7 basis points. On a 2-year, 345.55. Over the last month, we've done a lot of work in the gilt market. We just had in August the biggest monthly climb higher in 2-year yields on a record in the gilt market. The 2-year over the last month up 120 basis points. The 10-year up 92. The currency a whole lot weaker. Cable 115.85 right now. 114 handle yesterday. I think the low of the session was 114.44. And Lisa's been asking the important question all morning. Liz Truss, the incoming Prime Minister, is talking up the prospect of 170 billion sterling of aid to offset the energy crisis. That's about 5% of GDP. How will we finance it? A weaker currency, higher yields, and how difficult is it going to be this time around to do the same kind of things that they did back in the pandemic? When back in the pandemic, we had low inflation, we were cutting rates, and we had QE. And now we have high inflation, we're hiking rates. And Tom, in many parts of the world, we have QT.
Well, the many parts of the world is the key thing here, John. What really strikes me, coming off Labor Day, it's the beginning of the financial season as well, is how discreet and alone the United States is. All these other places, to borrow from Troy Gajewski, are going to use the war inertia or the Asia COVID Chengdu lockdown inertia, and they're going to buttress off that. And the U.S. is alone in its excellence.
You know who's alone, Tom? Who's alone in the central banking world? The BOJ. The Bank of Japan is in a very lonely place. And that tells you why dollar yen TK went through 142 a couple of minutes ago.
142, and those publications, John, are just absolutely extraordinary. There's no other way to put it. We're rapidly to that 145 level. Is 150 unimaginable? I'm not so sure.
After a 4% move in the month of August, we add to it this morning. 141.99 right now, 142 flat, a move of 1 percentage point in that currency pair. That's the cross-asset price action. Let's get you some single names. We can do that with Lisa. Hey, Lisa.
Hey, John. It really is a macro morning, and let's just put that into focus, especially ahead of the ECB meeting on Thursday and the confab of energy ministers in the Euro region on Friday. But there are some idiosyncratic stories. Bed Bath & Beyond is always one, this time plunging 14.4% ahead of the open as a result of the death of the CFO tragically dying. This seems to be what's generating the move in the shares. Lower GameStop, another meme stock, declining, perhaps in sympathy. People sort of questioning whether the froth is coming off. That particular sector down 3.8%. Tapestry, interesting. Those shares down 2.1%. Some people thinking that the retailer may struggle because of the increased COVID lockdowns in China. It is going to make it very hard for certain aspects of the luxury market to really rejuvenate. Elsewhere, when you're taking a look at markets, again, it is a rather quiet morning. FedEx is catching my notice, though, because Citigroup downgraded it to neutral. Those shares down 1.6%. The concern here is the macro concern, a decline in volumes of packages being sent around. How much do we see this really bleeding out, not just in some of the big retailers, but also the transport sectors as a result of trade, of economic activity contracting? And CoStar Group and Invitation Homes both surging as a result of being added to the S&P, Tom. Those shares up 7.4 and 6.9%, respectively.
It will be interesting to see. And again, the VIX 25.70, Dow up. It was about up 200 points earlier. It's a nice lift to the market this morning. Right now, Michael Schumacher joins us, Global Head of Macro Strategy at Wells Fargo, with a very sharp note out this morning. Michael, I want to take that analogy from academics of butterflies flapping, which has to do with the research of little things happening out there, whether it's Philippine peso buttressed right up against 57, Thai baht, and all the rest of it as well. Which butterflies are you watching this morning?
Biggest butterfly we're watching, Tom, is, I'd say it has to be the BOJ. It's got to be the yen. It's amazing. And you might say, well, it's not a butterfly, it's a giant. Okay, fine, but it's huge, and it's impacting markets in very unclear ways, I think, going forward. And the thought we've had, that a lot of people have had, is sooner or later, Kuroda-san will back away from his target on 10-year rates, but the question is when and how.
A basic question, Mike, and I say this with great respect for our audience of listeners and viewers. Why should Americans care about a stunning first and second derivative of yen weakness?
Yeah, for a few reasons, Tom. One is that when the BOJ moves, global markets feel the impact. And we've seen this a number of times over the years. In fact, even pre-COVID, it happened on a couple occasions. So if and when the BOJ does back away from the 25 basis point target, you'll see a very strong ripple effect, maybe even more than that, going into U.S. markets, German markets, et cetera. So that could have a pretty big effect, a lot of volatility, push up longer-term U.S. rates. That's the biggest thing. It also affects terms of trade, of course, but really I'd say the interest rate impact's the big one.
Mike, is there a buy point for the BOJ? It's clearly not 140. We're through it. Is it 145? Is it 150? What kind of numbers are you thinking about?
Yeah, John, it's interesting at this point. I'd say we're almost in another region, so it's pretty difficult to say, hey, we've been here 5 times in the last 12 years. Here are the sort of entry points that worked. Something north of 145 probably makes sense, but confidence level right now is very, very low. So anyone who wants to scale in, I'd say, and emphasize that, scale in. Don't try to pick the optimal point. You won't find it.
Mike, given the concerns that people have about rates rising in the Euro region, particularly because of trying to finance the deficit, of the issue in Japan that's going to lead to a lack of buyers for U.S. treasuries and the own U.S. inflationary issues, are you pushing back against the consensus trade of a couple of months ago to buy duration?
Yeah, we think it's premature, Lisa, and it's interesting, and I think you do have to segment it market by market. So take a look at the pricing in the Eurozone right now, for instance. The ECB is priced to hike something like 170 basis points over the balance of this year. Sounds pretty aggressive. What I think is really amazing and way off base is another 50 basis points in the first half of next year. Think about this scenario. Energy prices skyrocket. You've got a pretty nasty recession in the Eurozone, cold winter, a lot of very unhappy people, and somehow the ECB is still hiking? I don't think so. So it seems to us that's out of bounds. So maybe in that particular case, you could buy duration. But against that, think about the Fed. We've got the terminal rate for the Fed fund cycle now looking at 385, 390, something like that. Probably too low. I suspect that's going to be well into the 4s. So would not buy duration in the U.S. So perhaps in Europe, not in the U.S. case.
So just let's hone in a little bit on what you just said. You think that the terminal rate is in the 4s. And when do we reach that? You think it's going to be next year? And how long will we keep it there?
No, I think it's going to be this month. So in terms of the market pricing for the terminal rate, the market will bump that up probably after the SEP21 meeting. But I think to your point, so how far out does the market think the Fed is going to conclude tightening? It's probably somewhere in the March to June 23 range, but as far as the expectation, that happens very soon. The reality of the Fed pushing it there probably is 6-9 months down the road.
Has this been priced into the equity market?
Probably leave that to my colleague Chris Harvey, but I will say that generally speaking, when you've got central banks tightening pretty aggressively and QT, it's not a great recipe for risk.
I love that when the bond strategist is just like, I'm not going to justify this craziness in the equity market.
That's literally what he just did.
That's Chris Harvey, Mike Schumacher of Wells Fargo. Mike, good to catch up. Didn't we hear that from Bruce Kasman from JP Morgan this morning? I was being so polite when Bruce was on. Bruce was talking up the prospect of unemployment going through 5%. He was talking about the prospect of a much deeper downturn. I was sitting there just thinking, has he told Marco? Does Marco Kolanovic, does he know this? Lisa, based on what Bruce Kasman's saying about the economy?
Are you saying that Marco just sits at a table by himself and everybody else?
I've got no idea about the inner workings of the investment bank over there. I'm just saying, Bruce Kasman was talking up 5% unemployment to get inflation back down. That's not the bullish equity market fairy tale we've been told.
In fairness, taking a step back, you are seeing disagreement within shops, pretty violent disagreement, which is healthy considering the fact that it's really hard to know what's going to happen and it's hard to know what's getting priced in. That said, hard to see how a 4.5% interest rate in the U.S. priced in this month is really getting priced into the equity markets and let alone the credit markets.
Well, you asked the equity market question, so let's stick on it. That's the U.S. Let's talk about Europe. We're still off the lows of early July, as far as I can see. July 5th, still off the lows on the DAX. Haven't retested them just yet, Lisa. And I think we can all sit here and say that over the last 6 weeks, things have got worse, not better, in Europe, relative to what people were expecting 6 weeks ago.
There has been some support from some of the energy producers in Europe, right, that the shares have done better, and that's sort of something that has offset some of the pain in others. But it raises a good question, right? Are people basically already pricing in the bottom of something that hasn't transpired yet, even as other people say, we're looking at the worst case scenario?
This is a really difficult moment for the Europeans. And Lisa, to build on something that Mike Schumacher said moments ago, Tom, if the ECB has to back away from rate hikes, I keep going back to this question, and Lisa and I have gone back and forth online, offline about it in the FX market. Does that help the currency, or does that harm the currency?
That's the ambiguity. No, that's really well said, John. There's a lot of these movements, folks, there's ambiguity. That's the mathiness of whether the line goes one way or the other. John, it's a region at war, and when the facts change, they will change, and Christine Lagarde and the leadership will have to deal with it. I would suggest what you will see is currencies give way, and what the Germans fear most, which is inflation up, whether it's nominal or real. I go back and with Sebastian Mallaby, this is my first question on real incomes. The heritage of Europe, John, in declining real incomes is totally different than the New World optimism of America.
We're going to catch up with Sebastian Mallaby, the Senior Fellow for International Economics at the Council on Foreign Relations. Next, I believe, from New York City, with futures up 0.5% on the S&P, on the Nasdaq up 1/3%. There is an ECB rate decision coming up later this week on Thursday. And as that news conference is ongoing, Chairman Powell is going to speak at a monetary policy conference at 9:10 Eastern Time. And the coordination here is bizarre.
Today?
It's just bizarre. No, Thursday, Tom.
Oh, Thursday.
At the same time as the ECB news conference.
Yeah, wow.
Makes sense of that. Futures up 0.5%. This is Bloomberg.
Keeping you up to date with news from around the world with the first word, I'm Ritika Gupta. The U.S. Justice Department is deciding what to do next in the case of those documents taken from Donald Trump's home. A federal judge has granted the former president's request that a special master, a neutral third party, be appointed to review the documents. The judge also temporarily blocked the U.S. from using the documents in its criminal investigation. The Justice Department hasn't said whether it will appeal. In the UK, incoming Prime Minister Liz Truss has drafted plans to freeze energy bills for British households at or below the current level. According to documents seen by Bloomberg, the freeze could cost as much as $150 billion over the next 18 months. Truss is also planning a $46 billion support package to lower energy bills for businesses. In Canada, one of the suspects in the stabbing deaths of 10 people has been found dead. Authorities said that Damien Sanderson's wounds were not self-inflicted. They also believe the second suspect, Sanderson's brother, Miles, also is injured. The stabbings took place in the Canadian province of Saskatchewan. In China, lockdowns are spreading as a result of an increase in coronavirus cases. Parts of the southern city of 6 million Guiyang have been sealed off after it reported new cases. Meanwhile, the city of Chengdu has extended a stay-at-home order for its 21 million residents through Wednesday. And shares of Bed Bath & Beyond are plunging today following the death of CFO Gustavo Arnal. He fell to his death from a Manhattan skyscraper on Friday. He was one of the Bed Bath & Beyond executives who provided details last Wednesday on the company's turnaround plan. Global News 24 hours a day, on air and on Bloomberg Quick Take. I'm Ritika Gupta. This is Bloomberg.
What do you think of when you think of a battery? For most, it's what we use to power devices for both work and play, and maybe even your car. Over the past few decades, they've gotten way more powerful, long-lasting, and affordable. But all of this is just a prologue to what the next batteries are going to do.
As we drive to an increasingly renewable power-driven grid, we also need to be able to store energy and release it later to cover those periods of weather intermittencies that are driving this new grid that we're in. It's a multi-trillion-dollar opportunity, and it's imperative that we figure out the solution here.
How we store energy on a massive scale is in many ways the central challenge of the fight to stop climate change.
I'm Kaylee Lyons.
And I'm Damian Sassower. Join us each week on our brand new show, The Lineup. If you're betting on the Mets, it's a pretty good return.
We'll cover the latest trends in sports betting, the hottest matchups, shifting spreads, and the data you can't find anywhere else. It is crazy how much the money line has changed from the preseason to now.
Plus, expert insights from special guests.
The Eagles got a gem on their hands. I hate to say it because they're in the NFC East with the Giants.
Odds are it'll be your favorite way to stay in the game.
Catch The Lineup Fridays and Saturdays only on Bloomberg.
Politics to the world of business. Balance of Power with David Weston. News, analysis, insight from and about politics power players. Weekdays. This is Bloomberg.
When you think space, you probably think one space agency that travels under the radar is ESA. Which is surprising considering what the European Space Agency has achieved and how vital it is to the global space industry.
We've collaborated with pretty much everybody who is involved in space exploration.
But ESA wants to be a leading force in furthering humanity's mission into space.
Commander Ground, do you copy? Copy.
If we want to have successful human missions to Mars, we are going to have to learn to live and work off-world in a different way. The place where we are going to learn to do that is on the moon.
Can ESA help humanity take its next giant leap?
do, I think, have to get people back into the real world post-COVID, and a reminder that the government cannot solve every problem, does not have a bottomless pit of money. And in the long run, the only way to protect our standard of living, protect people's welfare, is to ensure higher levels of productivity and strong economic growth.
From one crisis to another in the UK, that was Philip Hammond, the former UK Chancellor. From New York City this morning, good morning with Tom Keane and Lisa Rabbits. I'm Jonathan Ferro. Futures positive, just about up 0.5% on the S&P, bouncing back from 3 weeks of losses on the Nasdaq 100, up 0.4%. Yields higher, Tom, up 6 basis points. Your 10-year, 325.57.
Very good. Right now, a 3-hour conversation that Lisa, John, and I would like to have with Sebastian Mallaby. He's Senior Fellow for International Economics at CFR. And very importantly, John, and I was just going through the Winslow Homer show at the Met, and there was a painting owned by one S. Druckenmiller. It was a beautiful imagery of the Caribbean. I can't quite remember it. But anyways, I think, John, Druckenmiller won that painting in the Soros Druckenmiller of 30 years ago today, as Sebastian reminds us. And, John, all I can say is that's the arch fear, not to be doom and gloom, but that's the arch fear for next year, is the United Kingdom unravels.
Hey, can we build on this just for a second, Tom?
Please.
Because I think it's so important. It's always described as the Soros trade that broke the Bank of England, but it's pretty well known and well reported by now that the architect for the trade was Stanley Druckenmiller. It was George Soros that taught Druckenmiller, so the story goes, to bet big, Tom, to go huge, to put the whole fund on something when you had conviction. But the original architect, I believe, was Druckenmiller himself, which is pretty cool when you look back all those years.
Well, we note the 30 years here of 3 decades, I should say,
Unreal,
and the tensions that are out there now. Sebastian Mallaby, thank you for joining us here. Does Liz Truss face dynamics like the United Kingdom faced 30 years ago?
Well, there's one huge difference, Tom, which is that back in 1992, sterling was part of the European exchange rate mechanism, and that created one of these asymmetric bets for Druckenmiller and Soros, where they knew that sterling was not going to rise. It was sort of at the bottom of the permitted band in the exchange rate mechanism at the time, and because Britain was in a recession, the Bank of England was going to keep rates as low as it could get away with, right? So if sterling was to rise a little bit, it wouldn't rise more. But if it crashed out of the ERM, it could go down 15% in one shot. And that's what created this totally asymmetric bet. That's why George Soros said to Druckenmiller famously, go for the jugular on this, put more money on, more money on. And, you know, they were both up all night trying to find counterparties to put more positions on so that they could get that billion-dollar profit when sterling did crack. This time, today, you know, the pound floats. It's already down a huge amount. It's down to levels of 1985. So it's adjusting gradually. There isn't one single breaking point, and that creates a very different dynamic.
As a kid, Sebastian, you lived this. Your father was the United Kingdom ambassador to Germany, and it was a time of Deutsche Mark volatility, to say the least. Are you looking at the currency markets as being the release valve for a system buffeted by a war in Ukraine?
Yeah, I mean, I think flexible exchange rates are playing their intended role of being shock absorbers. Right now, the US is in somewhat better shape than Europe. It's further away from Ukraine. It's less exposed to the inflation. So the US can have a very strong dollar, therefore absorb foreign imports more. And that's going to be a bit of a benefit for the rest of the world. China's in the dumps, and so it's not playing that role. And meanwhile, you know, Britain, which is in a very weak position because of uncertainty over huge gas price rises, baked-in inflation. Goldman Sachs predicting 22% inflation coming up in the UK. So these are dire straits. But because sterling has already fallen a lot, it gives some release in terms of a stimulus to exports from Britain, an attraction for foreigners to come into the UK property market because everything is so cheap. And that is somewhat of a stabilizing factor.
Sebastian, have you framed these numbers yet from Liz Truss? 170 billion sterling to offset some of the energy pain. Have you thought much about how big that actually is, the scale of that, and what it could mean for respective bond markets across Europe?
Yeah, I mean, we've come out of this, you know, COVID shock of enormous fiscal response to a public health emergency, and now we're going right back into a new kind of shock, an energy price shock, which is going to call forth another round of enormous stimulus. I haven't got the numbers in my head as to whether these 100 and something billion that people are banding around, we don't know for sure what the numbers are going to be yet, because the speech will come on Thursday, I believe. But whether it's bigger or smaller than the COVID fiscal response, I'm not clear, but it's cumulative, right? We've already got a position of huge public debt because we've come out of COVID. And now we're going to lay on more, and it's not clear how much the market's willing to finance. Now, at some price, if sterling depreciates even more, I guess foreigners will come in and buy UK assets and plug the funding gap. But it may take, an even weaker pound for that to happen.
Sebastian, back in the pandemic, policy from fiscal authorities and monetary authorities complemented each other. This time it feels like it's in conflict. What do you think the consequences will be for things like growth, inflation, with these kind of dynamics?
Yeah, I mean, that's a super important point, because, as you say, in COVID, we had the era of magic money, as I called it in a foreign affairs essay, meaning that there was this assumption inflation wasn't going to be there, so you could have both fiscal and monetary stimulus, and you were not afraid of being punished in terms of high inflation. Now, clearly, that's totally reversed. High inflation is a reality, so central banks have to raise rates. So we're in a situation where you're getting fiscal stimulus on the one hand in Europe, but at the same time, the ECB this Thursday is going to raise euro interest rates, and the Bank of England is going to have to tighten too. And so you've got, as you say, the two engines pulling against each other, and that's going to create more of a stop-start experience, and it's going to be tougher.
Sebastian, do you consider this as a one-off winter, or do we have to gear up for a repeat act next year and maybe even the year after that?
Well, I'm pessimistic in terms of the geopolitics of the war. I do think that neither side has an off-ramp. Ukraine cannot accept the idea that it lost the territory after February the 24th in a permanent way, so it's determined to win that back, and there have been these atrocious war crimes in Mariupol, and no Ukrainian leader can just say, well, that's okay, we're going to negotiate. On the other hand, Putin is not the kind of person who's going to lose face easily. So I think the war, to answer that part of the question, could go on indefinitely. It could be a very long process. On the other hand, we have to remember that with the inflation shock that results from the war, you do get these base effects. So the first round is that, energy prices spike up. That creates inflation. But they're not going to spike up further from the spike. At some point, indeed, we've seen that in markets, they start to come back down. So because of these base effects, I don't think inflation is an ongoing double winter kind of problem.
Sebastian, this was a clinic, and it's a conversation we need to continue very soon. Sebastian Mallaby there of the Council on Foreign Relations. TK, a very, very different policy picture this time around to 2 years ago.
Yeah, again, the separation here for me, John, is the war in Ukraine. Angela Stent writing in the centennial edition of Sebastian Mallaby's Foreign Affairs. It's simple, a brutal essay on Vladimir Putin.
And Peter Schiff Academy just publishing Wake Me Up When September Ends. He's not alone.
No.
From New York, this is Bloomberg.
So as you look back on your career, what would you say is the best investment advice you've ever received?
Probably the best investment advice that I never received, but that I've lived my whole life around, is surround yourself with really good people. I thought about it just today, like I do many times, what makes a great investor? A great investment firm is comprised of people who are optimists and pessimists and realists. Because in the intersection of the debates that go across that wide range of personalities is where you find truth. It's part of the reason I'm so focused on freedom of expression. I see it in my own four walls, the robust and fulsome debates around how we commit our capital, what defines a good idea, what businesses to build or pursue. That's what drives the success at Citadel. And I've been very fortunate in life to have always had a group of friends who really push me, who make me better. And here I get to work with 3,500 colleagues who in their ways make me better each and every day. And collectively, as a team, we've had the opportunity to have an incredible impact on the financial landscape around the world.
Markets are preparing to close, but the day is not over yet.
Stock that is now up about 45%.
A lot of volatility right now.
You need the power of the Bloomberg terminal to get you market-moving data before anyone else.
These numbers are much higher than expected.
Upgraded today to overweight.
You need top analysts to bring you exclusive global insight into cross-asset markets.
The muni bond market.
China is a really big focus.
Bitcoin ain't playing along today.
It's going to be short-term.
Bloomberg Markets, The Close. Weekdays on Bloomberg.
Daybreak with Lee.
On Bloomberg Radio.
Welcome to Daybreak Australia. This is Bloomberg Technology. This is Bloomberg Green.
On TV, radio, and the web, this is Bloomberg.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
There's still a lot of resilience in this labor market.
Obviously, the inflationary regime has surprised the Fed, it's surprised the bond market, and we continue to see those surprises.
I think it's a challenging environment for equities.
If we get a slowdown into the fall, which is my belief, then you will start to see more relief.
I think we'll have a recovery in 2024, but it's just too early to say, well, this is the time where the bear market is over.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
Good morning, everyone. Jonathan Farrow, Lisa Abramowitz, and Tom Keene. An exceptionally busy Tuesday morning. A new prime minister in the United Kingdom, but in the markets, a new currency regime. John?
And I think we've got to join the two, Tom. We've got a weaker currency in Japan. We've had more recently a weaker currency in the UK. The why? Because there's going to be a big fiscal effort, Tom, and there's a big question about how they're going to finance it. Through higher yields to attract foreign investors, or through a weaker currency, and or both. And that's the problem they've got, TK, in Europe and the UK too.
Extra data checks here in this hour. Lots going on here, particularly the linkage here of bonds, higher yields, lower bond prices, and currencies. But, John, it does come back to a resilient United States. Chairman Powell speaking Thursday. He's in the way of another economic event.
Yeah, and as far as I was aware, Tom, they were starting the ECB news conference a little bit later to accommodate the US data, and then they start it later and the chairman's going to speak in the middle of it. So I'm not sure how helpful that is, but as things stand, we get an ECB decision on Thursday, then we get a news conference, and somewhere within that news conference, you hear from Chairman Powell separately. Tom, right now, the US has energy issues, just nothing like the energy issues in Europe. And for that matter, there's a very, very difficult set of issues that the Europeans have to face that the US does not. And I wonder how that shapes people's perceptions, opinions, forecasts, Tom, of US growth relative to, say, Europe, which is also much more leveraged to a much, much weaker China over the last 6 months.
And the caution that I'm hearing, folks, here this morning on Bloomberg Surveillance, Lisa, to me, it all redounds back to a real income and real economy analysis. And what I don't understand is if you have a given inflation, whatever Bruce Kasman level, real incomes go down.
Real incomes are plunging, and even more so in the Euro region, where the labor market wasn't as strong as in the United States, and you didn't see the same kind of fiscal response. How does that factor into the growth outlook, and how does that factor into the Bruce Kasman outlook for unemployment rates picking up to a much more significant degree than people are currently forecasting?
It's going to be just fascinating to see. John, I want to do one thing here before we jump in to the data, and that is to go to your United Kingdom and the symbolism of a new prime minister and as a total hack American. In the crazy system, some people say she has a 5-day window. What is that about?
Yeah, forget the ceremonial stuff of today. She's got to come up with a plan. Some people think she's already come up with it. 130 billion sterling, Tom, to help freeze energy bills. That's one proposal. Here's another, a 40 billion sterling energy aid package for UK businesses.
Yeah.
So that's 170 in total. That's about 5% of GDP to address one winter, Tom, one winter. And that one winter could become 2, and it could be a whole lot longer as well. And the question I'm asking, Lisa too, and I know Guy Johnson in London is going to pick up on this a little bit later as well, can they repeat the act if they need to? Never mind pull up this one. Can they repeat the act if they need to?
It's a political maelstrom we'll continue to cover from 10 down the street. John, let me begin the data check by simply sterling, $4.52 long ago and far away, and now 1.1573.
Yeah, and 114 yesterday. So this is a turnaround, a stronger pound sterling today. Futures bouncing back to up 0.75% a little bit earlier. That fades a bit, still up 0.7% on the S&P. On the Nasdaq 100, up 6 or 0.7%. Talked about those high yields at the long end now, stateside, up 5 basis points on Treasuries, 324 on a 10-year. A little bit of calm in Europe after all the drama around Nord Stream 1 over the last couple of days. Euro dollar 99.24. We're basically unchanged on the session after having a little look at 98. Crude soft, the lower -0.2% on WTI, Tom, $86 and about 70 cents.
Right now, Victoria Green joins us, Chief Investment Officer, G Squared Private Wealth. And what we're going to do here is dive into the idea of what do you actually do? How do you affect investment given all of the turmoil that's out there? Victoria, how valuable is cash right now?
Cash is good. I'd rather sit in a very ultra short T-bill, somewhere between 0 and 6 months. You know, you're getting on the 6 months T-bill now, which has very limited duration or price risk. You're getting a 3.1, 3.2%. As this front end comes up, yes, if you look on a real basis, you're still losing versus inflation, but park it somewhere safe. And we do think cash as an allocation isn't a bad place to be. You know, one thing we do always advise, even when things feel very dark, panic is never a good investment strategy. And it's funny, you have very, very smart people that when we start to see these losses pile on, they just can't take it.
Let me announce, Victoria, with you my theme of the next 90 days in investment, which is something I heard in the dregs of August, which is trying to find scale. You and I have 3 or 4 good ideas, but it's so hard now to get scale in investment, to get belief across X number of equities, to get belief across different portfolios. How do you get scale if you got a fair amount of money?
Well, what you want to do is you want to be in the right places. You know, I don't think diversification is dead, though I think it is amusing every time we see stress and volatility. You know, the VIX has remained low, but we saw assets become correlated. And honestly, I think it was the fixed income that surprised everybody this year. But I do think when you're looking at investing, you don't want to just say, I'm going to put a little bit in everything, because there are markets that are going to do a little bit better than others. Right now, we're not very bullish on Europe or the UK. No offense, John, but there's a bit of a high wall they have to work on over there. So I prefer to be like, let's be a little more concentrated. U.S. blue chips, value, dividends. Put your stocks where you're going to have a little bit of a bunker mentality, and then work your way back out into risk. We're never black and white. We're not a hedge fund. We're not trying to long short and trade every single day. But if you were to look at the world, I'd say I would bunker in quality. I'd make sure you understand everything you own and what kind of risk you have in your portfolio, and then understand your time frame as an investor, because if you can wait it out 6 months, 12 months, it's going to be okay. It's just you have to emotionally get ready that maybe you shouldn't look at it every day, and then definitely don't panic. And honestly, panic is one of the biggest risks to investors right now. Let's say we go down 4 weeks in a row. Let's say we retest our 3,600 lows. Do you have the courage and conviction to hang on to your stocks? And the answer should be yes.
Victoria, you know me. I don't take offense. I just draw the line at soccer versus football. Other than that, fill your boots. Go for it. Criticize the
John,
UK.
she's from Texas A&M. John, she's a fighting Texas Aggie.
I'm aware.
Football is the American football.
Our year. year.
You want to go there?
100%.
I thought it was Bama's year again. No? We're going to do U.S. college football?
No.
We're not. Okay.
I mean, look, it is definitely a religion down here, and this year is A&M's year, 100% national championship.
Okay, well, I'm trying to get to a game down south later this year, so maybe we can sort that out. Victoria, I want to talk about the pain and the pain still to come in your mind. If you do have a longer time horizon, I want to understand from your perspective where you expect the leadership to come from through the next cycle. Is it too premature, too early to make that call?
I think we're still on the down end of the cycle. So this is the classic business cycle, right? We have expansion, and right now we're not. You know, PMIs, I think, are going to reflect that, and you're going to have this contraction. So during the contraction period, you want to be bunkered, you want to be in safe havens, and you look at defensive sectors, your health sectors. I know staples are a little expensive, so I'd be picky there. Utilities versus REITs have done well, and I still don't mind a little bit of energy. And one thing I think is fascinating about that part of the market is that energy prices or energy stocks have decoupled a little bit from oil prices. So we saw in August WTI pull back about 8-9%, but the energy sector was actually still positive in August. And I think a lot of that is the way U.S. energy companies are giving back to shareholders, their dividends, their fixed plus variable dividends, their buybacks. So even at 86, you know, we think, well, there's a lot of very profitable energy companies, and the U.S. is now becoming an energy exporter. I think we exported something like 10 million barrels of refined product just last week. We're doing about 1 million barrels of gasoline. And so we're seeing this continued demand, and you're going to see the push-pull in demand as we see recessions typically are bad for gasoline demand. The China issue, are they shutting down again? You know, sometimes it feels like Groundhog Day, like we can't get out of this. Oh, we've got shutdowns, we've got COVID, we've got demand issues. And then when everything feels terrible, that's when you want to start buying some growthy things and some longer duration equities. But you don't necessarily want to hold a ton of higher beta, higher risk stocks right now.
Victoria, just quickly here, have the large cap U.S. stocks priced in European recession and the strong dollar?
I think so. The strong dollar, yes. You know, and if you look at, you know, we're kind of playing again Groundhog Day. What pulled the markets down through that second quarter was the strong U.S. dollar and the Fed raising rates, and then the dollar pulled back some, and commodities have pulled back some, but you still have a huge headwind. I think the recession in Europe and the energy crisis that is brewing is something investors cannot ignore. We are not an isolated nation. We're interdependent with each other. And as you guys were talking about earlier on the show, this may be a crisis that drags on. It is going to be very difficult to replace the amount of gas that is needed over the winter, and then potentially to do it on a go-forward basis. We're even drawing down our SPR. It's as low as possible, the strategic petroleum reserves. Ever since we started building it up in the 70s and 80s, we are now back down to levels we haven't seen. So how long can these Band-Aids continue? We'll have to see.
Victoria, thank you. Always good to catch up. Victoria Green there of G Squared Private Wealth. Often a mistake, Tom, sometimes a mistake, to extrapolate out the negativity currently at several years, but it's worth a conversation. Are we ready to talk about this next winter? The winter after that?
No, I think you're dead on, and it frankly comes back to the war. I mean, the idea, I still love, John, how certain media are like counting the days of the war.
Sure.
It feels like the first battle of Bull Run, which is the American experiment. John, I totally take your point on the extension of this, and I just wonder the separateness of America this morning. Let me look at yen. See, it's 142-ish, 141.92. John, Texas A&M at Alabama, October 8th.
Very cool.
There
very
you go.
cool. How do we get tickets for that? Is it difficult? I hear it's very, very difficult.
I think the only one I know in our orbit that could get tickets for that, Kaylee Lines, is
Maybe
so
she
wired.
could hook that up.
She is so wired.
Is she, Tom? Let's work that out. Let's work that out. I hear that's the closest you get to European football in terms of atmosphere. You need to go to a college game in the South. Am I right, Barbara?
Honestly?
Am I?
UVA is not Alabama. I'm just saying, Virginia.
Well, no, she likes college football.
Okay.
Though.
All right.
Katie likes
all right.
college
all right.
football.
So perhaps she
it
can
wasn't
get
a
it
UVA
in.
connection.
Okay.
It was just she likes college football.
Good clarification.
And that, Lisa, given where the bar is for this show in college football,
that's got that right.
Above where we are at. But she likes it, and maybe she's a little bit more dialed in.
Thank you.
Up 0.75% on the S&P. From New York, this is Bloomberg.
Keeping you up
Up to date with news from around the world with the first word. I'm Ritika Gupta. The Justice Department is considering whether to appeal a judge's decision regarding documents seized from Donald Trump's home in Florida. The judge has granted the former president's request to have a special master, that is a neutral third party, review the papers. The judge, who was appointed during the Trump administration, also temporarily blocked the government from using the documents in its criminal investigation. Liz Truss officially becomes the UK's next Prime Minister today after winning the Conservative Party's leadership contest. And she's drafting plans to aid households and businesses with their soaring energy bills. The proposals could cost close to $200 billion. European leaders are scrambling for emergency fixes to an energy crisis that is getting worse. In Germany, the government reversed policy and moved to keep 2 nuclear power plants alive. They'll be kept in reserve in case they're needed for this winter only. Meanwhile, Germany's agreed to export more electricity to France. The French will send gas to Germany when it's needed. The drugstore chain CVS keeps expanding beyond its retail origins. The company has reached a deal to buy home health and technology services provider Signify Health for about $8 billion in cash. Other bidders included Amazon and United Health. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
What do Formula One cars and your local supermarket have in common? Well, strange as it sounds, they might both be using the same technology. A lot of innovation has trickled down from the world of high-tech engines, and it hasn't just found a new life in road cars. F1 cars have long been thought of as the peak of cool, and technology in them is also helping to cool down our produce aisles. Engineers from Williams are using their knowledge from 9 Constructors' Championships, working with company Aerofoil to help reduce the energy consumption of supermarkets. The device they're building is based on the design of an F1 car's rear wing. It attaches to fridges to keep more cool air in the unit. They estimate it can reduce supermarket energy consumption by 25%. One innovation from F1 is also helping hybrids reduce their carbon footprint. That's KERS, or the Kinetic Energy Recovery System. In common parlance, it's known as regenerative braking and works by storing energy of the car decelerating in a battery for later use. If that's not enough, F1 is now looking at TERS, or a thermal energy recovery system, looking to harness the heat produced from braking and the engine exhaust. That could allow cars to generate the same power using 30% less fuel. So while F1 may have a reputation as a gas guzzler, some of its innovations in the name of speed are helping in the everyday fight against climate change.
The difference between endless research and a winning strategy. To improve your firm's productivity and profitability, Bloomberg Law combines the latest in AI-powered tools and in-depth analysis to accelerate the research process. To grow your practice and make better use of your valuable time. The difference is Bloomberg Law.
No one covers the world like Bloomberg.
We have to get interest rates higher and bring inflation back to our target.
33 million people have been affected by this flooding in the monsoon.
Disruption is the whole point of a strike.
With unmatched reach and resources from more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, your global business authority. When U.S. jobs numbers are released,
numbers are pretty much in line with what Wall Street expected.
Bloomberg brings you crucial data at terminal speed.
315,000 jobs created, an optimistic number for the Federal Reserve.
And instant expert analysis.
Dare I say that this might be called a Goldilocks jobs report?
What this does is really push away a lot of the arch gloom.
Maybe leading us toward a soft landing.
The Fed is still going to be debating 50 or 75 basis points.
Nobody covers jobs day like Bloomberg, your global business authority.
They can't afford another winter like this. It's simply impossible to politically be allowing that to happen. So they're going to have to invest in supply, alternative supplies, whether it's renewable, whether it's nuclear. I know nothing of that is immediate and nothing's going to be fast. It's going to have to be a combination of demand destruction. But demand destruction is also politically unpalatable because it essentially means you need to create a recession.
More trouble brewing, more trouble brewing. Kona Hack there, the head of research at ED and F-Man from New York City. Good morning, Tom Keene. Lisa Bramberts and Jonathan Ferro. Futures positive 0.7% on the S&P. On the Nasdaq 100, up around 80 points, up 6 or 7/10%. Euro dollar unchanged at 99.29. Here comes another one. It's Evercore. The rising likelihood of a 75 basis point hike from the ECB. Quote, is probably now the more likely outcome. Tom, join a club. There's so many people lining up looking for 75 this Thursday.
The way that we're going to stop there, John. This is really important. The weight there is Edward Hyman, who I'm told is looking for us to get back to 4%, and then what? Inflation.
Krishna Guha leading the coverage here, Tom, alongside Peter Williams.
Yeah.
And the then what? You're right. The then what next year? If you get the kind of demand destruction that Kona's talking about,
right,
in the European economy, Tom. Then what for the ECB?
That's right where I wanted to go. Joining us now, the historian and head of hydrocarbons for all of Bloomberg, Will Kennedy, joins us this morning in London. Will, to round this out, and I'm sorry that we missed you on your trip to Balmoral this morning. Will, to round this out, the arch fear here, looking at Rotterdam coal, which you and Javier Blas look at by the minute, is a United Kingdom that returns to the agony of the 1920s and the 1930s, that time of real income slowdown. Is that a reality given the energy impulse there so different than America, that we could see in the United Kingdom a legit long-term real income decline?
It was happening. I mean, when you're faced with utility bills tripling, you're going to see people's real incomes plummet very fast. But what's happened this morning is the new Prime Minister, Liz Truss, who has gone to Balmoral to be appointed Prime Minister by the Queen today, it looks like, and our politics reporter Alex Wickham reported this morning, that she is going to introduce a huge intervention into the energy market to cap bills at where they are today. It's going to cost well over £100 billion. But what that will do is it will prevent the worst of that real income slowdown, and it will perhaps take some of the sting out of inflation.
Well, it helps the energy companies, and it's not targeted in any way, shape or form. Will, when you have conversations with your team, with your contacts, your sources, are you thinking about the prospect of the need to do this twice, not once?
I mean, that's the problem. The great flaw in this plan, of course, is that if you just cap energy prices, you do nothing to address the demand problem. And you had Kona Hack talking about demand destruction having to be part of the solution. Politicians have set targets across Europe to reduce demand 15%. We haven't really had that conversation in the UK. And if you don't let prices rise, people keep using energy as they have been, and that means that prices and demand are likely to stay high, and the bill will come in higher and higher. What happens in the spring? Well, we don't know where we'll be. We don't know where we'll be in terms of Russia, in terms of pipelines, in terms of the broader economy. But clearly, by offering the support now, it's going to become a pretty open-ended promise, because you're not suddenly going to want to triple prices in a year's time. We're only 2 years away from election in Britain.
If you take a look at the Twitter comments on some of the plans and the potential wrath inflicted upon the pound as a response, people say it's Brexit's fault. And this is a direct result of Brexit, that the situation has gotten as dire in the UK, even relative to the rest of the European region. Is that accurate? How much does that and the lack of the interdependency of the two regions really play into the energy story here?
I don't think it's a huge issue in the energy story. I mean, it may be part of the broader weakness in the pound may well be to do with Brexit. But when we specifically talk about energy, the energy markets remain as interconnected as they had been before Brexit. We still have big gas and power connectors between the UK and the EU, and they're still working. I think people overcomplicate this issue sometimes, talking about the energy transition. And, you know, at the end of the day, this energy crisis is happening across Europe because Vladimir Putin took the decision to stop supplying gas to Europe.
Well, it's also,
that, at the end of the day, is the bottom line.
It's the policy response to that war that has exacerbated these issues. So it's not the war per se, it's the policy response to it. When you look at the support in general across Europe right now, across countries and within electorates, are you seeing any fragmentation, any breakdown in that support for the policy response to this war?
Well, we have seen some protests over the weekend, most notably perhaps in the Czech Republic. I think that it is a key concern of policymakers. They realise that it's going to be a tough winter and they've got to find the policies to get through it and to bring their populations with them. And that's why you're seeing the kind of interventions that you're seeing from Liz Truss's new government, but also that we saw over the weekend from Olaf Scholz's government in Germany, where they had a package of sort of 60-odd billion euros. France has already capped prices. As I've said before when we've talked, you know, the answer here is a huge fiscal intervention. It's now happening. You can see it happening.
John, to you and to great respect to Will as well. John, is Prime Minister Truss a war prime minister?
Well, Tom, there's a war, but she's not directly engaged in it, is she, Tom? Would you say the UK is at war with Russia right now? Would you say that? I think you can say at wartime. There's a war in Europe taking place in Ukraine. We'll carry on. Please jump in.
I think what we're seeing this week, and the way I would describe it, is that we are seeing an economic war between the West and Russia and an energy war. And we've seen that escalate this week with the price cap idea on Friday and the response of shutting out Nord Stream. And I think both sides are working out how to get through the winter and how that war plays out through the winter. On the one hand, Russia is making a bet that the pain will be so great that they will break European resolve. On the other hand, European governments are marshalling their balance sheets to bring huge financial power to bear to get them until the spring.
It's a high stakes.
It's going to be an amazing,
ugly blinking contest. Well, that's for sure. If we can all also trivialise it that way. Well, you're just one of the best, and I love catching up with you, mate. You know that. Will Kennedy, thank you, sir, out of London. Bramo, it's expensive. It's going to be difficult to do it once. It's going to be much, much harder to try and do this twice.
And the reason why I mentioned Brexit is because the reason why the currency can be the pressure valve is because it is not part of the European region trying to assess this in real time together. And it never was part of the euro, but still it's relevant in the isolation of the UK economy at a time when the dependency, the interdependency could be helpful in terms of scale.
We're going to see different approaches here, Lisa, to addressing this issue. And the latest from Liz Truss is she just goes for the blanket big one. 130 billion for consumers and 40 billion for businesses. We'll see if they're the numbers, if that's the plan.
But you said this. Okay, let's say that's the plan now. What happens if they have to do a redux of this in a year? What then?
You'd have to imagine it's slightly different and revolves around demand destruction in a much more material way. See which way Europe goes too on this. It's already getting very expensive, Tom.
Do we see a Chancellor of the Exchequer today?
No idea, actually, Tom. Hopefully in the next 24 hours we get some more detail on that. Futures up 7/10 from New York. This is Bloomberg.
reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
Talk about the future of the entertainment business. Where do you think it's going? Do you think there's going to be movie theaters forever?
Anybody that says to you, and I won't name names, that says the movie business is over, are fools.
When I started, I had no idea it was going to turn into this, which is a tracksuit empire. I don't have any investors. All this is all money in. This is me going out and hustling, bringing that money back, and just building it, building it, building it. You gotta think about a person that was homeless at one point, didn't really have any money coming in. The fact that this person was relentless and just determined to succeed and not let rock bottom define him as an individual. I can take things and put them together and take them apart and make them better and put them back together. I respect the craft, so I don't want to minimize and disrespect the value of each step of the craft and do by machine what should be done by hand.
Markets countdown in Europe. From the financial centers of the world, Bloomberg Markets European Close with Guy Johnson in London and Alex Steele in New York. Real-time numbers, real-time analysis. Weekdays.
I'm Kaylee Lines.
And I'm Damian Sassower. Join us each week on our brand new show, The Lineup. If you're betting on the Mets, it's a pretty good return.
We'll cover the latest trends in sports betting, the hottest matchups, shifting spreads, and the data you can't find anywhere else. It is crazy how much the money line has changed from the preseason to now.
Plus, expert insights from special guests.
The Eagles got a gem on their hands. I hate to say it because they're in the NFC East with the Giants.
Odds are it'll be your favorite way to stay in the game.
Catch The Lineup Fridays and Saturdays only on Bloomberg.
Bloomberg's covering all things crypto, the people, the transactions, and the technology. Bloomberg Crypto, today on Bloomberg.
Live from New York City this morning. Good morning with Tom Keene and Lisa Bravitz. I'm Jonathan Ferro. Futures positive 23, up 0.6% on the S&P. On the Nasdaq 100, up 0.5%. Josh Wingrove down in D.C. here at Bloomberg put this tweet out moments ago. The president is planning a celebration of the Inflation Reduction Act next week on the same day that August CPI data comes out. So there you go. Look ahead to that. I believe September 13th, Tom, is when we get that CPI data for the month of August.
And it's going to be very important. I mean, you know, John, we haven't talked about this at all, but off the jobs report, I mean, frankly, the inflation report is equally as important.
Oh, without a doubt. The Fed chairman talked about the totality of the data, Tom, whatever that means. And the totality of the data over the last week has been better than expected across the board, actually. I think claims lower than expected.
Right.
The ISM was better than expected. Consumer confidence was more robust. The jobs report was pretty solid. Take your pick, Tom.
We drive to Thursday, and there will be an ECB meeting. It is always good to have John Farrell with us because he's got a little bit of experience with the 3-hour lunches in Frankfurt. Is there going to be a 3-hour lunch in Frankfurt for that critical meeting, John?
I think they probably need it to go a little bit longer, Tom.
5-hour lunch.
We'll need a drink after this one if we get that 75 basis point hike. I did not expect that. 6 months ago, 3 months ago, even a month ago, didn't expect to move that big.
Still unimaginable. I give a nominal GDP in the animal spirit of Europe in a war. Wow.
Yeah, I agree.
It'll be interesting to see. We'll march to Thursday on that data. Right now, we march to a bigger view of the math of this foreign exchange market. Eric Nelson is out of the exquisite math economics program at Wake Forest. He's with Wells Fargo as their macro strategist. Eric, thank you so much for joining us on short notice. For those of you on radio, his gorgeous Telecaster is noted in the background. Eric, I want to talk to you about a shift that always happens under crisis in foreign exchange, fixed or floating. We go from a rate analysis, a relative rate analysis, to looking at flows. When do flows matter for, in the news, the United Kingdom?
I
think we're already there, Tom, especially with the UK, but also in Europe. Of course, you have the well-documented balance of payment situation in the UK, an ever-expanding current account balance. And this continues to be a problem as we start to see more fiscal measures from the UK, from Europe. We start to see fiscal concerns return in the UK, which we haven't seen for a long time, and Europe as well. So this is really going to hinge on, what can fiscal authorities do in these regions? And also we have to think about backstops. The ECB, the famous transmission protection instrument, will that be discussed at this week's meeting? I think that'll become an ever-increasing focus for the FX market.
Chris Watling from Longview Economics writes up a dissertation on this in the FT this morning. And I would suggest, Eric, that people ignore flows. They ignore balance of payments. It's some heavy lifting academically. In Japan, it has to be like a teeter-totter, flat on the ground. I mean, Japan is basically a broken foreign exchange theme, isn't it?
I think that's right, Tom. And there's not enough focus, in my opinion, on Japan's energy situation. Look at the cost of a cargo swap of LNG, the JKM benchmark. That's gone up about 400% year over year. We talk a lot about Europe and UK energy prices surging. Japan is also competing for the LNG and is having a very difficult time. So right now, the yen weakness is as much about the central bank and the macro as it is the energy, and increasingly we'll see it become more of an energy story.
Eric, how far can the dollar strengthen before it becomes a massive liability to the one perhaps stalwart economy amid a sea of pain?
This is such an important question, Lisa. I'm glad you brought it up. And we look back to the mid-1980s, the Plaza Accord, coordinated FX intervention. We've got a long way to go, I think, in terms of levels before the Fed, the Treasury start to get worried. Right now, the dollar strength is as much a good thing as it is a bad thing. But fast forward 6-9 months, euro maybe at 90 cents, dollar yen at 150, U.S. manufacturing starting to really look weak. Maybe the calculus changes and we start to talk about coordinated intervention. I don't think we can rule this out.
So, Eric, you rolled off these numbers that are actually gaining some traction in other places. Jordan Rochester putting out some similar kinds of targets, that 90 euro mark also emerging, 150 for the Japanese yen. I'm trying to wrap my head around how disorderly those moves could be. I mean, are these pretty violent moves that you see, or just a slow grind, weaker and weaker and weaker versus the dollar?
Well, for dollar yen, Lisa, it's been violent so far, and I have to wonder at what point the MOF and the BOJ really come to an agreement here on wanting to step in. It's been, essentially 10 big figures in the span of a month or so, and I think you could see some action here in maybe in the next couple of weeks if this continues at this pace. For euro, I think it will be more of a grind, and as we see more crisis conditions unfold, we start to get a sense of what the implications are here. But this could unfold over several months.
Eric, when you talk about the prospect of coordinated intervention, you give much thought to what shape that takes? Is that just an empty statement at a G20 meeting? Is that something a little bit more bigger than that? What is it?
Well, John, in some cases it could be in relation to a specific currency. I think back to the late 1990s with dollar yen. The BOJ's efforts to stem yen weakness were largely futile until the Treasury and the Fed stepped in the U.S., and we had a pretty substantial reversal. So it could take that form. If it's especially concerning and we start to see, food crisis, energy crisis really spiral here, then maybe you see the G7 get together and there's coordinated action, not just statement. And again, this is a tail risk scenario. If it happens, it won't happen for quite some time, but I don't think we can really assume this won't happen.
Well, Eric, the Europeans need a strong currency. They can't buy one. The UK need a strong currency. They can't buy one. This just feels like a US decision, doesn't it? Won't it just come down to the Treasury and Secretary Yellen to make that call?
They'll probably be the most important player in those discussions. I think you also have to consider we're at war here, on a global stage, economic and actual warfare on the ground. So that will certainly factor into the calculus.
John, I just want to point out that Eric Nelson of Wells Fargo is driving yen to new weakness as we speak right now, 142.14.
Well, the problem is, Tom, we've gone through 140, and when we were in the 130s, we were asking the question, is 140 the buying point to get the BOJ to lean the other way? And Eric, once you go through 140 and you don't hear a whisper, it does open up 150. Is that kind of the way you think about it?
Yeah, at a certain point, you start to just test the BOJ. And what's interesting is you go back to the late 90s, and what the BOJ actually did was they waited for a pullback in dollar-yen and then really stepped on the gas and intervened, trying to make an even larger move as opposed to sort of pushing on a string. We could see that happen here over the next couple weeks.
Eric, when you talk about a coordinated action and the fact that it really has to be the U.S.'s decision, it hinges on when it becomes more painful for the U.S. to have a strong dollar than it is to possibly coordinate some action. What is that level?
I don't know if it's so much a level, Lisa, as it is the broader conditions surrounding dollar strength. You start to see, let's say, some more emerging market crises. Again, the food and energy situation become more concerning globally. The Fed and Treasury are very aware that the global price of the U.S. dollar is one of the most important factors in the global macroeconomic environment. So huge, and I think that if you're looking at a very precarious global situation, even more precarious than we're in now, the Fed may have to do something.
Well, Eric, come on. Let me get you in trouble here with your general counsel this morning. Are we looking at EM fragility out of the 90s? I'll let you pick your vintage, or is this time different?
Well, every crisis is different, right, Tom? But so far it's been mostly contained. And I look at the Chiles and the Argentinas and the Turkeys as being probably, as usual, among the most vulnerable. I don't think we're at a point yet where we're worried about defaults in these types of regions, but at least downgrades, Tom. And of course, if the pain continues, then eventually you start to get worried about balanced payments. But we're not quite there yet.
Eric, awesome to catch up.
Eric,
and I want to again give you the shout out for the parity call you made earlier this year, before it was really in fashion and before we were that close to getting there. Congratulations on that call earlier this year. Thank you. Eric Nelson there, joining us from Wales. Tom, it was a big call from him and the team, and we hit parity and cleaned our way through it pretty quickly.
And other people, I think, with the same call as well. And of course, the people going the other way have been quieted. We need to remember, John, it's not just so much the vector, it's the speed of move, the size of move. The phrase it's used is big figures, and it's a big figure time for foreign exchange.
We've settled down, I think, with the euro, at least for now. At least we're at 99.26. But we have, Tom. We went through parity how long ago?
Yeah.
Been in and around that kind of level.
Are we settled down waiting for the meeting, the ECB meeting?
Waiting to see what happens next, and we're waiting for that next catalyst, Lisa.
Well, and will a 75 basis point rate hike, this perhaps will be the tell, will it support the euro? Will it actually create a little pop, or won't it? And if it doesn't support the euro, then what? And I really do think that could be a catalyst in and of itself. This idea hiking into weakness isn't enough to give a boost to a currency that is responding more to economic outlook than it is to monetary policy.
What did you make of that call on the prospect of coordinated intervention?
I think it's a tricky one at a time when, as Eric was saying, the U.S. is doing okay. When does the pain in the rest of the world become strong enough for the U.S. to respond more than to the inflationary outlook than is driving polls, driving sentiment, driving the economy?
Nearly everybody wants a strong currency. Not everyone can have one.
Right.
Who wants to give up that strength if they've got it? I'm not sure anyone wants to do that right now, given the inflation backdrop. Tom, maybe that picture changes in 12 months' time. My response to the BOJ, you can imagine how this conversation goes. We need some help. Well, tell your central bank to do something about it. Tom, isn't that the first step?
Yeah, well, the central bank's going to provide leadership, and critically, John, they're going to be ex post, completely data dependent, and that even folds into the politics. What does the governor of the Bank of England do, given a new prime minister that by some reports has a 5-day window to act? That's not in the textbooks.
I would say that the projections that came from Governor Bailey and the team last time around did not include 170 billion pounds worth of aid to offset the energy issues. Jim Cameron's going to join us from Morgan Stanley shortly. Brian Nick of Nuveen, Amy Wu Silverman of RBC to guide you through the opening bell. We'll kick that conversation off in about 19 minutes' time on Bloomberg TV. Live from New York on TV and radio, this is Bloomberg.
Keeping you up to date with news from around the world with the first word, I'm Ritika Gupta. It's official, Liz Truss has become the new British Prime Minister. Queen Elizabeth II asked Truss today to form a new government after she won the Conservative Party leadership race. The two met in Balmoral Castle in Scotland. Truss replaces Boris Johnson, who offered the Queen his resignation earlier in the day. The U.S. Justice Department is deciding what to do next in the case of those documents taken from Donald Trump's home. A federal judge has granted the former president's request that a special master, a neutral third party, be appointed to review the documents. The judge also temporarily blocked the U.S. from using the documents in its criminal investigation. The Justice Department hasn't said whether it will appeal. The Prime Minister of Ukraine is confident that European leaders will keep sanctions on Russia despite the turmoil they face in energy markets. He spoke with Bloomberg's Maria Tadeo in Brussels.
We can see absolute understanding from European leaders that we are in a hybrid war. We have absolute understanding that Russia is blackmailing European politicians, and we have absolutely assurance from European politics that they will stay with Ukraine till the win.
The Prime Minister also said Ukraine's allies should do what they can to help end the war quickly, since Moscow is willing to keep fighting for a long period. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
Apple's delaying its next major iPad software update, iPadOS 16, by about a month from September to October. Apple made the decision for a number of reasons, including a still buggy Stage Manager multitasking interface and in order to link the launch closer to the more similar macOS Ventura. Still, it's an unusual move. Since shifting the launches to the fall in 2011, Apple has released its new iPhone and iPad software updates simultaneously each year around September. By staggering the releases, users may find some issues around compatibility with cross-device features like retracting and editing messages in iMessage, the new shared iCloud photo library, and the new feature for transferring FaceTime calls between iPhones and iPads. It will also make it a bit harder for developers to launch apps that run on both the iPad and iPhone that require new APIs and features found across iPadOS 16 and iOS 16. Regardless, it was still, of course, the right move. Stage Manager on iPadOS 16 is still quite buggy. I don't find it particularly intuitive, and it's not compatible with most iPads and many third-party apps on the App Store. The feature clearly needs some more polish. And complaints from consumers about Stage Manager will now no longer probably overshadow the earlier launch of the iPhone 14.
If you do any kind of business in this country, there's a pretty good chance that you're going to see that business registered in Delaware. Why? Because that's where you do it. And our point was Wyoming can be that venue for blockchain enterprise, for crypto.
It's not the Wyoming way to sit around and wait for change. We want that independence, we want that freedom, we want that individuality. And that's a common theme that brings together bipartisan support for this in Wyoming.
We want to make sure that people understand, especially in Wyoming, but as the United States as a whole, this trend is coming. It's not going to stop. This is more of a small town that's growing into what I would call the cryptocurrency version of Silicon Valley.
It's the philosophy of that rugged individualism, the independence, and the ability to really get things done for yourself and control your own destiny. You get that from a blockchain, and you don't get that without it.
Balance of Power with David Weston. News, analysis, insight from and about politics, power players. Weekdays, this is Bloomberg.
Unfortunately, good news in the labor market can be bad news because the Fed will have to respond more. And so I think it's on a good path. But the Fed is still going to be debating 50 or 75 basis points. And I think it's going to end up at, very close to 4 by the end of the year, if not at 4, and then be, hold with a 4 handle through much of 2023.
Leading our jobs coverage on Friday, the former governor of the Federal Reserve System, Randy Kroszner of Booth School. He's been hugely valuable for us over the years. Futures up 24, Dow futures up 200, the VIX 25.63, and right now on a Tuesday, Lisa, foreign exchange on the move, DXY just through 110, and yen can't get out of its way. Weaker yen, a stunning 142.28.
Just surging, at least taking a look at the dollar versus the yen. And what's the break point? We just were talking to Eric Nelson, talking about a 150. What would that do to the world currency order?
Right now, bull, bear, gloom. Kriti Gupta joins us with a chart. Kriti, what do you have?
Well, a lot of gloom, and it feels like the gloominess is just not abating when it comes to the stock market. That brings me to my chart of the day. Remember, we are starting the fall season. We are coming after Labor Day. The expectation here is that volume is really just going to pick up. The investors on the sidelines perhaps making those bets. But so far, Tom, if you look at this chart for our radio audience, essentially we're looking at the bull-bear spread. It is just going down, down, down. It has been for the last year or so, and really steepening lower in the last month or so. The question here is, does that continue ahead of a seasonally bearish month? September has been pretty horrible for the stock market, but just given the selling that you've seen, maybe it'll reverse. Maybe this time will be the exception, Tom.
Gupta channeling Abramowitz, the toxic brew of chartdom this morning. Right now, we're going to rip up the script, which you can always do with one B. Ritholtz. Masters in Business is the podcast. Barry Ritholtz with an important book out on the great financial crisis, but far more than that, in the trenches of looking at performance in investment. Earlier this morning, Benjamin Laidler was on from eToro, and we did not have time to get to his important note on the complete outperformance of index funds over active. It is absolutely stunning, Barry, to see ETFs double their size from 2018. It continues, doesn't it?
Yeah, it's just an extension of a trend that dates back to the 2000s. My pet theory is between the analyst scandal and the accounting fraud and IPO spinning and all that mutual fund scandals, at a certain point, mom and pop just said, we've had enough. And they said, we don't want to play this game. The only way to win a game that you are up against a much smarter, stronger, better equipped opponent is to not play. And so they said, the hell with stock picking, we're just going to index. And it's been incredibly successful for them.
It has been. And Barry, there is a question going forward of whether that will change, or at least whether it will move to factors rather than simply broad-based indexes, because of some of the idiosyncratic natures of the shocks that keep getting thrown at this market.
Yeah, we keep hearing that. Every time, there's a long period of inflows to passive and outflows from active, it just wait for the next fill in the blank. Just wait for the next recession, next crash, next pullback. And, it hasn't happened. This has been an unusually good year for active because half of active is slightly outperforming their benchmarks. But most of the time, it's fairly less than that. And so, maybe some factors are going to work their way in. I spoke with Eric Balchunas, who is the Bloomberg Intelligence ETF analyst, and he covers a lot of passive. And it seems the general trend is towards a core of passive. Maybe that's 50, 60, 70%, with a bunch of very differentiated satellites, whether it's ARC or some factor fund, small cap value, whatever. And that seems to be a big trend amongst investors.
Barry, I know that you're a stalwart of the buy and hold and be invested, stay invested in the broad market thesis. Right now, we're facing shocks unlike what we have seen in decades. We are looking at a Japanese yen that is the weakest going back to 1998. We are looking at an energy crisis in Europe unrivaled in its recent history. How does that change your investing thesis?
Well, remind me who forecast those events taking place and then position themselves in advance of it. Some tiny percentage of investors manage to get that right, but they're few and far between, and it's hard to see them doing that consistently over time. That's why a lot of what we call macro tourists constantly find themselves getting burned. Very often these big macro events that people are trying to adjust around, it's already reflected in stock price. It's hard for any individual to beat the collective wisdom of the entire marketplace. There are trillions of dollars at risk, very smart people, lots and lots of firepower put to work to do this, and very few people can.
Barry, I got to leave it there. I got about 8 more questions here on active passive. I think it's really at a tipping point into 2023. I've said that before and been wrong, though, so I got to be careful there. Barry Ritholtz, thank you so much. Of course, his podcast is a good value for you. It's back to work. It's after the summer. Get a new habit. Ritholtz and his podcast is very, very important. Lisa, I really don't know where to begin, but I think I can make the statement. It's a little inflammatory. The yen is in free fall.
It seems to be falling pretty dramatically. It's the new post-1998 low versus the dollar first low weakness. How much are we looking at some sort of breakdown in the system where there aren't a lot of levers to be pulled, right? And this is something that we've been talking about with the possibility that Eric Nelson raised and also Jordan Rochester of Nomura of a 90 level on the euro versus the dollar. Because where else is the pressure going to be relieved?
One of the advantages here, Lisa, it's in your world is the Bloomberg Total Return Index is the set of them. There's like 8, 9, 10 of them are really valuable right now. And on price, we really haven't broken down to new higher yield, lower price. But oops, we're getting there. Maybe this week, maybe dovetailed into ECB.
Well, particularly on the short end of the curve, what you're seeing is a real bifurcation between the long end having some support and short-term rates seeing some of the biggest rises that they've seen in a coordinated action going back decades or ever, and that's something that people are looking at. How much can the ECB raise rates by potentially, 175 basis points by year end, which is what's being priced into the market before you get some sort of more significant disruption?
Really can't convey how interesting across equities, bonds, currencies, and commodities the moment is. This is going to be very exciting tomorrow and into the ECB meeting on Friday. And who knows the news flow from the United Kingdom and from Tokyo as well. This is Bloomberg. Stay with us.
Welcome back to another special U.S. Open update for Bloomberg TV and radio from Tennis Channel. I'm Jamie Maggio. It was an amazing Labor Day for 2 Americans at the U.S. Open. Francis Tiafoe clinched the biggest win of his career with a 4-set victory over Rafael Nadal. The loss was the Spaniard's first at the majors this year and snapped his streak of making 16 straight quarters at the Slams. 24-year-old Tiafoe becomes the first American man to reach the Elite 8 at the Open since John Isner in 2018. And Jessica Pegula flew the red, white, and blue with an impressive straight sets win over 2-time Wimbledon winner Petra Kvitova. The New Yorker moving on to the quarters at a Grand Slam for the 4th time in her career. And don't forget, Tennis Channel Live at the U.S. Open has all the news you need from the Big Apple, and you can watch it daily at 9 a.m. Eastern. I'm Jamie Maggio.
What do you think of when you think of a battery?
For most, it's what we use to power devices for both work and play, and maybe even your car. Over the past few decades, they've gotten way more powerful, long-lasting, and affordable. But all of this is just a prologue to what the next batteries are going to do.
As we drive to an increasingly renewable power-driven grid, we also need to be able to store energy and release it later to cover those periods of weather intermittencies that are driving this new grid that we're in. It's a multi-trillion-dollar opportunity, and it's imperative that we figure out the solution here.
How we store energy on a massive scale is in many ways the central challenge of the fight to stop climate change.
Markets are preparing to close, but the day is not over yet.
Stock that is now up about 45%.
A lot of volatility right now.
You need the power of the Bloomberg terminal to get you market-moving data before anyone else.
These numbers are much higher than expected.
Upgraded today to overweight.
You need top analysts to bring you exclusive global insight into cross-asset markets.
The muni bond market.
China is a really big focus.
Bitcoin ain't playing along today. It's going to be short-term.
Bloomberg Markets, The Close. Weekdays on Bloomberg.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts. Be alive and start exploring to see what's moving the markets. Visit Bloomberg.com webinars.
Well, let's get this trading week started. Live from New York City this morning. Good morning, good morning. Equity futures slightly positive. The countdown to the open starts right now.
Everything you need to get set for the start of U.S. trading. This is Bloomberg, The Open, with Jonathan Farrow.
Live from New York City, we begin with the big issue, a synchronized mess for global markets.
The headwinds are just very strong.
The energy crisis.
China's lockdowns, the complete lockdowns.
Earnings estimates, growth estimates. Global tightening, weaker global growth.
The global slowdown.
This is not good.
Oh my God, it's a nightmare.
The global pressures maintain a huge overhang over risk assets.
There still seems to me plenty of room for the US to really push earnings down.
It's going to be much harder to identify a viable bottom. The combination of events is certainly going to be depressing.
The volatility of markets.
We're buckling up. We're going to see a lot of volatility. It's going to be really hard. There's no easy way to put this.
Joining us now to discuss is Morgan Stanley's Jim Karen, Nuveen's Brian Nick. Brian, straight to you. Everyone's bearish. Is that a good enough reason to be bullish?
Well, usually is a good reason to be bullish. Certainly individual investors are still registering as quite bearish on the sort of bullish-bearish spectrum. I think there are those concerns in the clips you showed are all valid. A slower China, energy crisis in Europe. I think the one thing that didn't probably get mentioned enough is the fact that the U.S. seems to be headed toward, I think, what passes for a best case scenario here, where it's not quite a complete immaculate disinflation where things magically improve, but I think we are seeing signs that hiring managers, consumers are going to carry the U.S. economy through it. If you'd want one economy globally to still be chugging along at this point, you'd want to pick the U.S.
We caught up with Rick Reeder of BlackRock last Friday after the payrolls report. Jim Karen, he's betting that we can get a soft landing, except he's not actually betting on that with his money right now. He's still holding cash. Jim, do you think we can get a soft landing, but is it too early to express that in this market just now?
So I'll say that it's certainly possible. That's within the realm of possibilities. It's seeming less and less likely, though, as time goes on, especially with what's going on in Europe and energy problems and things like that. Inflation's very, very high. But look, it could be the case that that the Fed is hiking interest rates, inflation will come down, and that we do get a soft landing. Now, the idea behind a soft landing is to say that we don't have a deep recession. So it's debatable whether we're in a recession right now or not. 2 consecutive quarters of negative growth, but obviously jobs aren't consistent with that. The jobs market's still very, very strong. So I think a hard landing or a recession scenario really comes when the unemployment rate really starts to spike a lot higher. So I think we can think about having a soft landing, but I think it becomes a very, very hard bet to place. And the markets aren't necessarily calling for that if I look at the Fed funds futures market either.
We've still got to consider weaker earnings as well. Mike Wilson, your colleague over at Morgan Stanley, Chip, said this morning. We think the next several quarters will end up containing some of the most significant downward revisions to forward EPS forecasts we have seen in the past several cycles. Jim, how bad is the earnings story going to be through the next couple of quarters?
So I think it's a good question. You know, clearly inflation has propped up earnings, and now as inflation starts to come down, it's going to slow earnings. And this is part of Mike Wilson's fire and ice. Fire is that the Fed hikes interest rates and it slows and it hurts the stock market. Ice is when you have a slow earnings growth, period. So I do think that over the next period of time, over the next quarter or so, we're probably going to see a downward adjustment in forward expected earnings. But the idea behind the whole thing, though, is that Mike Wilson's also calling for the fact that we probably bottom in the equity markets sometime in the fourth quarter, and that if we have a recession, maybe the bottom's not quite in, but we're close to it. So effectively, what we're really saying is that we are at a turning point, that the data, as far as the earnings are concerned from corporations, are starting to catch up now with the economic fundamentals, especially as inflation starts to come down. So look, I don't think it's going to be an easy road ahead, but I think it is going to be somewhat bumpy, and I think there's going to be some opportunities to find some good assets to invest in that maybe have already priced this in.
Well, Mike's at 3,400 in Q4 as a low, at a minimum, that if we get a recession, it could go as low as 3,000 on the S&P 500. Brian, hasn't the chairman of the Fed just told us the rules of the game? That even if we see evidence of, say, a Goldilocks jobs report, that's not something you can buy, not something you can expect a durable rally from, because they want to keep financial conditions tight. Isn't that just the rules of the game now through year end?
Absolutely. I think we're writing our fourth quarter outlook right now, and one of our themes from the last quarter was it's all about the Fed, and I think we're going to keep that theme in place and say it's still all about the Fed, because all these market movements are being seen through the prism of how central banks, not just the Fed, all central banks are going to respond. So that really good jobs report, what I thought was sort of a Goldilocks type report on Friday, doesn't get cheered the same way that it would if it wasn't being seen as maybe giving the Fed some reason to continue hiking at 75 basis points or to hike to a higher terminal rate. But I still think this comes down to consumers. Unless and until we see the consumer roll over, either because the job market gets incrementally or significantly weaker in the next couple of months, or because confidence just sort of falls through the floor because maybe we get another spike in, say, energy prices. Unless and until we see that, real incomes have turned positive again. If you look at the U.S. consumers, sort of the economic scenario they're facing, the spike that we got in commodity prices and the drop in real incomes has already happened, and they kind of sustained growth through that period. So if we start to see, again, tame commodity prices here in the U.S. combined with rising incomes and rising employment, that's, again, exactly the scenario you'd want to see if you thought we had any chance at a soft landing here.
Futures right now positive 0.5% on the S&P 500, down into the opening bell about 25 minutes away. Equity futures on the NASDAQ up 0.5% also. ECB rate decision this Thursday. And whilst the news conference is going on, you're going to hear from the chairman of the Federal Reserve, Chairman Powell. Mike McKee, who scheduled that one this Thursday?
That's a good question, John. And another question we're asking ourselves this morning is, why did we bother to come back from the summer after Labor Day in the United States? Because there's a whole lot of problems out there that you got to factor into your trading, one of which is recession in Europe, the UK cost of living crisis, of course, UK and EU power crisis, not getting a lot of attention, but it does get the sobriquet Lehman moment because there are margin calls on energy companies they may not be able to meet. OPEC is cutting its supply, didn't raise its supply, so maybe oil prices go back up, haven't yet. And then, of course, the always present China COVID zero overhang. So we go into the week with a lot to watch. Liz Truss, Her Majesty, has blessed her prime ministership, so now we got to watch what she does to try to bail out the United Kingdom. And then today we get ISM services and the S&P services, the PMI's services and composite. The Royal Bank of Australia raised 50 this morning. Royal Bank, the Reserve Bank of Australia raised 50 this morning. The Bank of Canada expected in an hour to do 75. Wednesday, we get the trade balance here, and of course, the dollar and trade, very important around the world. The Beige Book is coming out, and as you had a picture of all those Fed people speaking, Barkin, Mester, Brainard, and Barr, and then on Thursday, Powell at the same time as Christine Lagarde. We're going to have to figure out which one goes on Bloomberg television. Jobless claims, Friday, Evans, Waller, and George, and then the Eurozone energy ministers meet to try to deal with that Lehman moment question. So a lot of news that's going to flow across your Bloomberg today. The ECB is going to be the biggest thing of all, of course, and that is Thursday, and we will be watching to see what they do right now. The OIS markets are pricing just under a 75 basis point move. They're leaning in that direction. And the markets are already asking, do they do another 75 after this?
And this has changed not just in the last 6 months. I'd say this has changed in the last 6 weeks, the last 2 weeks, the last 1 week. Mike McKee, the ECB changed its timing of the news conference to accommodate US data, and the chairman has put an address right in the middle of it. I'm not sure what I make of that. Mike McKee, thank you very much, sir. Jim Caron, you're calling this the RIP cycle. Now, that's enough to make me run a mile, yet at the same time you're saying there's opportunities out there. What are the opportunities out there in the so-called RIP cycle?
So the RRP cycle is recession, inflation, and policy risks. And clearly central banks are on high speed to control inflation. And if we have recession risks that are out there, the response to control inflation is higher rates. But if you're worried about recession, you might need to lower rates. So therefore, the policies are at odds with each other. So it's really a question of time frame. I think that over the near term, what the Fed, the ECB, the Bank of England, and almost every other central bank is going to try to do is contain inflation risks and bring those inflation risks a lot lower. In that interim period of time, I think that there is going to be some volatility in the markets. But we also have to remember what the end game is. The end game is that after this episode, it has passed, let's say over the next quarter or so, then what we're likely to see is a lower period of inflation, and then many assets, whether it's fixed income or even equity, start to actually look like they have some value. But in the interim period, it's very, very near term. So the way that I would think about it is that if we are having a slowdown, then it's likely that when we have a recession, if we have a recession, it's a mild recession, which means default risks are going to be low. So if interest rates rise, which they're doing, then high yield, investment grade, mortgage-backed securities, all of these bonds start to look like very, very interesting investment opportunities, as long as we believe that default risks are going to stay low, because if we have a slowdown, it's mild, or it's a recession and it's mild, and this is going to represent a great buying opportunity. So this is the way that we have to think about it across these time frames.
Jim, is 326 on a 10-year a good buying opportunity?
So, I mean, I think that the 10-year could probably get as high as 350 to 360. That's roughly the highs of the year. So maybe the highs of the year are already in. So as long as you have some room to give the 10-year yield to maybe sell off a little bit more, I think it's a decent buying opportunity. I think it's going to be hard for 10-year Treasury yields to get much higher than that unless we have a really strong economic rebound and we have significant inflation going forward, which could push yields higher. But right now, that's not in our expectations. We do expect there to be a rolling over of the economy and also a containment of these inflation risks over the next few quarters. So I think 3.5% in the 10-year yield is about where we think it could go. So if you're willing to be a little bit early, then maybe 325 could be an okay spot to start to add some duration.
Climbing a big time this morning, up 7 basis points on the 10-year to 326, and raising a move lower in Friday's session at the front end, up 9 basis points on a 2-year to about 348. Jim Caron, Brian Nick, sticking with us. Counting you down to the opening bell. Let's get you some stocks on the move ahead of that open. Here's Abby.
Hey, John. Well, also climbing, at least in terms of price, stocks themselves. After 3 down weeks, we do have the S&P 500 futures higher, helping out in a big way, big tech. Apple leading the charge, up about 0.6%. Even with yields higher on the morning, big tech not really falling on this, ahead of also Apple's big iPhone event tomorrow, product unveil event to see that iPhone 14 plus other products. ADT soaring up 16%, a $1.2 billion investment from State Farm at $9 per share in the security company. Google's also reported to have invested in the company. CVS Health up 1% after buying Signify Health for $8 billion. This had been rumored, now it's official. And of course, the company moving more and more away from retail into other health businesses. Signify, of course, is a home services tech company. And then finally, Bed Bath & Beyond shares declining sharply. This, of course, after the recent death of the company's former CFO. The path forward becoming a little bit less clear, John.
Incredibly tragic story. Abby, thank you. Coming up, European officials racing to address the deepening energy crisis.
We need to be prepared for a total cut of gas supply from Russia. And we have been preparing that kind of decision.
That conversation, up next.
Is there still room for Abenomics to be carried out in full in the way that Shinzo Abe imagined it?
The economic situation that Prime Minister Kishida faces today is very different from the one that Abe Shinzo was faced with when he became Prime Minister 10 years ago.
Does Japan need a new policy? Is that what Kishida has to learn, or are there parts of this that he should hold on to?
I think there are probably parts that he should hold on to. I think the main challenge which Japan faces is demography. The population is declining, rapidly aging. Women are totally underused in the labor force, especially educated women. One needs to think about increasing immigration. These are issues that Abe tried to address, but a lot more needs to be done to quote-unquote revitalize Japan.
When you've had your fill of IPOs, ETFs, and CPI,
tune into the lineup for some NFL, NBA, and MLB.
catch the lineup right here on Bloomberg.
When U.S. jobs numbers are released,
Numbers are pretty much in line with what Wall Street expected.
Bloomberg brings you crucial data at terminal speed.
315,000 jobs created, an optimistic number for the Federal Reserve.
And instant expert analysis.
Dare I say that this might be called a Goldilocks jobs report?
What this does is really push away a lot of the arch gloom.
Maybe leading us toward a soft landing.
The Fed is still going to be debating 50 or 75 basis points.
Nobody covers jobs day like Bloomberg, your global business authority.
It's not a surprise. Nobody should be surprised by this very last decision of the Russian government. We need to be prepared for a total cut of gas supply from Russia.
Europe scrambling to address the deepening energy crisis with Russia closing off its main pipeline to the continent. Energy ministers meeting Friday to discuss possible market interventions as government officials continue planning their own relief measures. The UK Prime Minister Liz Truss putting together a £170 billion fiscal support package.
I will deliver on the energy crisis, dealing with people's energy bills, but also dealing with the long-term issues we have on energy supply.
One of the best joining us out of London now, Bloomberg's Will Kennedy. Will, let's go there. The proposal, what we've seen in the reports, 130 billion to freeze energy prices for consumers, and then something like 40 billion for UK businesses. Will, what are they trying to achieve here, and what do you make of this plan?
Well, it's an enormous plan. Those numbers, if they come to pass, would represent something like about 5% of GDP. So to spend that in a period of 18 months is a pretty extraordinary intervention that rivals and maybe even surpasses what was done during the pandemic. So it's a bazooka solution. What they're trying to do is basically freeze prices, remove the pain for households. It would cap prices where they are now, so it would mean that people aren't exposed to the massive rises we've seen in wholesale prices over recent months. And it would take the political sting out of those proposed rises, and it would put a cap on inflation too.
Does it
but
do
at the expense
anything
clearly
to
of,
address demand? Will?
Sorry?
The issue that you've brought up is whether it does anything to address demand. And looking at the Europeans, we were waiting for that next phase.
Yeah, that's the downside, of course. I mean, one way you address this energy crisis, which is basically about a shortage of energy, is to constrain demand. And we've seen the market doing that. We've seen industrial users in the UK and the EU, people like metal smelters, fertilizer factories shut down because they can't afford it. But of course, if you're just going to subsidize prices for consumers, they won't be turning off their tumble dryers, they won't be using their dishwashers less often, they won't be, importantly, turning down their thermostats. Now, that's good for consumers on one level, but clearly it does nothing to balance the market, and that means that ultimately it might make some form of rationing more likely.
Will Kennedy out of London. Will, we're going to catch up with you through the week, hopefully, to get the update on this as we look for more details of that plan from Liz Truss. Will, thank you. The plan so far, £170 billion. And as Will Kennedy pointed out, that's about 5% of GDP. And the question we've been asking repeatedly over the last week is how wide open this bond market is to finance that. Now, clearly, when we had a massive fiscal effort back in the pandemic, we had low inflation, we had rate cuts and QE. And this time around, the backdrop is very, very different. Fiscal authorities and monetary policy authorities aren't complementing each other. They're in conflict. So we have the big fiscal effort on the horizon. We don't have QE, we have QT. We don't have rate cuts, we have rate hikes, and we don't have low inflation. You all know that. We have high inflation. So, Jim Karen, it makes me wonder, ask the question, how expensive is it going to be to finance a big effort like the one we're discussing in the UK right now?
So you're asking the right question. It's a question of cost. And this really accentuates what I call that RIP cycle here. It's just another element of it. So it's really a question of control and the cost. So Europe and other countries say we're going to have a price cap on energy. Conveniently, there's an oil leak in Nord Stream 1, and what Putin says is, well, if you're going to have a price cap, then what I'm going to do is I'm going to make the cost of that price cap extremely high by limiting these supplies. Now, I don't know anything. I'm just looking at the facts, and I'm just trying to put things together here. So then it becomes a question of what is that cost to economies very, very broadly, and then how does that impact their balance sheets, so terms of trade and other things of that nature, and then ultimately how does it impact GDP and growth. And then to your point, John, is how does all of this get paid for? And this becomes a financing issue. And maybe we're going to see the immediate cost in this in terms of higher bond yields, higher interest rates. And this is obviously going to weigh on economic activity. Higher rates discount future cash flows. That lowers the present value of the assets. That brings asset prices down. So it's really a question of how do we control this situation with energy, Russia, and what have you, and what is the actual cost for that? And we have to think about it along those lines. And as you point out, how do we pay for it? Bond yields.
Higher yields, a weaker currency, that's what we've seen. We've just had the biggest monthly pop in two-year gilt yields on record. And we've also had, at the same time, the worst month for sterling going all the way back to late 2016. Brian, when you look at policy in conflict like it is in Europe at the moment, what do you think the consequences of that will be?
I think cost, which you guys have been talking about, is definitely one angle. I think effectiveness also matters too. If you have the fiscal authorities that are trying to loosen things up, trying to encourage consumers to spend, not just on energy, but giving them enough money to spend on all the goods and services that they typically buy. But at the same time, you have central banks that are aggressively raising interest rates to basically try to stop that exact kind of spending. these two things are not going to be as effective as they would if you were doing them in isolation or if they were synchronous like they were for most of the last 2.5 years when everybody was just easing like mad. So I think the problem here is going to be, on the one hand, you have some part of the government trying to support the consumer and businesses, and another part of the government is trying to push them down, and you might end up with neither policy being terribly effective, which is, again, is not going to be great for revenues, for earnings. I don't know about the direction of interest rates, because on the one hand, if you have a slower economy, the longer term interest rate should be going down. But right now you have very high inflation expectations in the UK and in Europe that I think are keeping those bond yields higher because there's concerns about just how long this is going to go on.
Right on cue, the 10-year gilt yield through 3% for the first time since 2014, and some people forecasting there's more upside here for yields in the UK and across Europe and more downside for the currencies. Jim Karen, when you look across the central banks right now, it's not just the Fed and 75. Catherine Mann of the MPC over at the Bank of England delivered a speech in the last 24 hours, talking up front-loading again, going big possibly. So we're talking about the potential of 75 at the Fed, 75 at the Bank of England, 75 at the ECB. And Jim, maybe the more important question right now is whether we start having a conversation about who leads the cuts here first, the ECB, the Fed, or the Bank of England?
So I think there are three questions: how much, how high, and for how long. How much are central banks going to hike rates over the very, very near term? I think they need to be aggressive. I think that talking along these lines for right now is probably the right thing. But it's always a question of what is the terminal rate? How high are they actually going to go? And then secondarily, how long are they actually going to stay there? And what I think is going to happen is the way central banks have typically operated in the past is they tend to hike interest rates until something breaks. Because you can hike rates, and if you're still getting inflation, if you're still getting high prices and what have you, they're going to keep going until you get a material economic slowdown, a hard landing, or possibly a recession. That's what the futures markets are actually pricing in right now. People talk about a Fed pivot or a pivoting of central banks. Yeah. That's really not what the futures markets are saying. What they're saying is that the more these central banks hike, the higher, the fatter the tail is that we get some type of an economic accident and something breaks and they have to cut rates very, very quickly at some point in the future. I would argue it's the U.S.
Hey, Jim, this was great. Jim Karen, Brian Nick, great to catch up. Terrible stories sometime. And think about this, we're just talking about one winter. That's what we're framing out right now. Relief for one winter. What about if we have to do this again? Coming up, the morning calls, and later, RBC's Amy Wu Silverman bracing for a volatile few months still ahead. She joins us around the opening bell.
Consumers are very aspirational. You've got millions of people riding motorbikes, and they want to be riding inside cars. Vingroup, Vietnam's biggest conglomerate, has really tapped into that. The founder and chairman aspires to be the Elon Musk of Vietnam.
Vuong is Vietnam's richest man with outsized ambitions. He wants to sell cars not only to the Vietnamese, but also Americans and other consumers around the world.
If VinFast is successful, that goes very well with the ambition of the Communist Party of Vietnam. But if they fail, it will be very, very hard blow to Vingroup and also to the national economy.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
4 minutes away from the opening bow this morning. Good morning. Just about holding on to these gains here, up 0.4% on the S&P, on the Nasdaq 100, up 0.25%. That's the price action. Here's your morning calls. First up, Citi downgrading FedEx to neutral, 225 price target, expecting macro headwinds to continue pressuring the company's earnings growth potential. Your second call from Wolf Research, upgrading Tesla to outperform, 360 price target, saying benefits from the Inflation Reduction Act could boost shares by as much as 30%. That stock's up 0.5%. And finally, JP Morgan downgrading Discover Financial to neutral, taking a more cautious view on U.S. consumer finance stocks amid numerous uncertainties. Just a moment around the opening bout, you're going to hear from the Ukrainian President Volodymyr Zelensky delivering remarks prior to the opening bell on the New York Stock Exchange. I believe we can catch up with AMH down in D.C. to guide us into that. Anne-Marie, what are we expecting here?
Well, Jonathan, over the weekend, he spoke to Ursula von der Leyen of the European Union, and what likely he's going to be doing is making sure that he is still sounding the alarm that even though potentially it's still not front page news every single day in the United States, there is an active war in Ukraine, and this is a country that is asking for more money. And of course, now we have the Senate back in session today, where their top priority is going to be being able to fund the government through October 1st. And one item that the White House is asking the Senate and Congress to pass forward is more aid to Ukraine, to the tune of $11.7 billion. Some of this would go to equipment, going directly to Ukraine. Others monies would go towards the Pentagon, replenishing their stock, intelligence, etc. Also, $2 billion earmarked, the White House is asking for, on potentially helping the U.S. energy sector, as we are going to see those prices rise. It's not going to be the similar situation like they're dealing in Europe, where it's very, very challenging. But at the same time, they are looking down at this winter and how this war is impacting those energy costs. And Zelensky is going to want to remind Americans that please continue to stand with us, even though it may hurt your own economies.
Anne-Marie, it's not just the United States, it's the Europeans as well. You've seen some of these numbers. They are huge. Big, big numbers in Europe to offset some of this energy pain. Can he keep the support of the Europeans on side as well? I believe we can take a listen to President Zelensky right now.
We stand so that every Ukrainian would enjoy all the manifestations of freedom available to a free person in a democratic society. We have achieved significant results. We have united the whole world around our struggle for freedom. We are liberating Ukrainians' territory from the Russian army. We have already started renovating everything that was destroyed by the Russian terror. We are rebuilding our economy. We are giving you and your companies the opportunity to work together with us for the benefit of all us. Ukraine is the story of a future victory and a chance for you to invest now in projects worth of hundreds of billions of dollars to share the victory with us. Today, we kickstart a large-scale promotion campaign to attract investments. Advantage Ukraine. We will tell the world why Ukraine is a place for good investments and financial opportunities. I invite you to Ukraine. Invest in Ukraine. This will be your victory and a new success story for your companies. Slava Ukraini. Start your work.
There's the opening bow live in New York City this morning. Good morning. That was President Zelensky rigging the opening bow virtually for the New York Stock Exchange from Ukraine. We'll catch up with Anne-Marie Hordern a little bit later again in the program. About a few seconds into this, going into the opening bow, futures positive 0.25% on the S&P, on the Nasdaq up around about 1/10. The story fades in the equity market. If you get to the bond market, we look a little something like this. Yields higher through much of this morning on a 10-year by 9 basis points, the 10-year 327.86 in the FX market, breaking down again on euro dollar 98.98. We're down 1/3%, and crude higher by $1, 1 percentage point higher, 87.85 on crude. Let's get you some of the stocks around the open. Here's Abby.
John, well, we are off the pre-market highs for stocks, but we do have some stocks solidly higher, including Apple. This, of course, ahead of the company's annual product event tomorrow. Of course, that iPhone 14 will be revealed among other products. Investors and folks wondering what the new iPods will look like. Tesla up about 0.9%, getting a nice upgrade from Wolf to outperform ahead of, according to the analyst, the reason for this bullishness, the new EV tax credits that are coming. UAL, or United Airlines, higher, up 2%. This, of course, getting the overall sector getting a lift from Europe. Lufthansa avoided a strike, and United does, of course, have a JV partnership with Lufthansa. And then finally, yields higher, as you were mentioning. That's helping out the banks. Wells Fargo is one of those banks, up about 0.9%, John.
Abby, thank you. Around the opening pound then, we are positive on the S&P 500, just about up 0.4%. The Nasdaq up by about 0.25% as well. So slightly firmer around the open this Tuesday morning. With a little bit more, here's Taylor Riggs. Hey, Taylor.
We're going to do some fundamentals and some other non-fundamentals, John. When we think about some of the meme stocks, and it's that meme ETF, as you can see, really a big decline when you think about sort of the peak trading and some of the peak highs for a lot of these companies. AMC, GameStop, a few that we're taking a look at on that intraday basis that are declining just a little bit, particularly for GameStop as we get into some of those quarterly results tomorrow. Change up the board. Let's take a look at this terminal chart, John, because one way, instead of buying the outright stock, we know, of course, that there's been a lot of activity within the options market. This chart, though, shows that there's some of the fewest trading of calls that you've seen since a lot of the meme mania began back in about December of 2020 and January of 2021. So you're looking at some lighter trading volume as we head into this. Note my language. I mentioned the GameStop quarterly results, not the earnings, because there are no earnings. They're still facing some significant losses on the bottom line as we get some of those reports tomorrow. But this shows sort of the 10% in either direction implied moves that you sort of get after the reaction to those results. So maybe some future volatility ahead.
Taylor, more vol to come. Amy Will Silverman of RBC on board with that. We're going to catch up with her in just a moment. Tallbackers Michael Purvis had this to say: the PEs and equity risk premia are more attractive than they were in the middle of August. It might be enough to keep aggressive and persistent selling. We think this also means a lot of cross-asset volatility, which is coming right on cue for the historically most volatile month of the year. Kelly Lyons has more. Hey, Kelly.
Hey, John. Not just the most volatile, but also historically the worst in terms of performance for the S&P 500. September since the year 2000, on average, bringing a decline of about 1.3% for this equity market. So will that hold true again in this month in 2022, and maybe more importantly for the rest of the year? Because if you're looking at the bear case, there's a number of things to point to potentially, including from Mike Wilson over at Morgan Stanley, warning on earnings downgrades today, saying the S&P could fall as low as 3,000 in the case of a recession. And you also have a bear case potentially in that the Federal Reserve would maybe like to see equities continue to decline as they try to tighten policy. The researchers over at Leuthold Group showing that basically a 19% drop in the S&P 500 is usually a prerequisite for getting inflation under control, considering so much of American money is at home in the equity market. And of course, as the Fed tightened policy, that brings rates higher, and we know that affects interest rate sensitive, high multiple stocks in particular. We had a nice rally in the NASDAQ 100 from mid-June until mid-August as we saw rates moving lower, yields moving lower. But now that yields are back up more than 60 basis points, since August began, we've seen the NASDAQ 100 rolling over as well. It's information technology, communication services, consumer discretionary, all those tech-heavy sectors have posted the biggest losses since that rally peaked mid-last month. In fact, pretty much every major industry group is down since then, the one exception being energy, which of course is a whole lot cheaper, John.
Kelly Lyons, thank you. The breakdown of today's session, Kelly doing a brilliant job of just breaking things down more broadly for today. About 4 or 5 minutes into it, we're advancing about 0.25%. Utilities, top of the pile, up 0.8%. Communication services, bottom of the pile, down around about 1/3%. You've all heard the bearish speak, I know. This from Mike Wilson and Morgan Stanley. Here's another quote from him. We think the lows for this bear market will likely arrive in the fourth quarter with 3,400 the minimum downside. Right now, 39.33. He thinks if we get a recession, we could go as low as 3K. He says our leading models point to continued and increasingly significant EPS growth downside well into 2023. He cut his earnings forecast a little bit earlier this morning. We shared some of that with you. So just one of many, many bears out there at the moment. Here's one bull. It's Ben Laidler of eToro. Take a listen.
Inflation fever, I think, is beginning to break. The U.S. economy is actually re-accelerating right now, right? It's not about to sort of plunge into recession. We're having healthy jobs reports. We've got gasoline prices coming down. The consumer is going to end up with more money in their pocket. This is a market which is talking itself into a funk.
RBC Capital's Amy Wu Silverman joins us right now for more. Amy, love catching up with you. You're strongly convicted there's more volatility ahead. Why is that?
Well, several reasons, John. You know, one you guys pointed to earlier, which is historically and seasonally, September and October tend to be the most volatile times if you look to the past decade of how VIX rises. But on top of that, it's been very interesting because the options market has been exhibiting very low skew, meaning there hasn't been this desire to hedge. And one thing that concerns me is if there is that mad scramble to hedge, if you start to see more downside, then people are going to have to pile in very quickly, and that can tend to exacerbate certain moves, especially volatility.
Amy, I was going through your notes, and one thing you provided is advice for anyone sitting on any gains they've got left from the June rally, the bear market rally, labeled that way by many. What is your suggestion? What's your advice?
Yeah, look, you know, it's interesting on an individual stock basis, things are exhibiting something quite similar to the macro level. But look, if you've had kind of stocks up 25, 30% since mid-June, and you think as we head into the year, there's going to be more downside catalysts, I think overriding actually makes sense right now on an overall basis. You know, limited upside. What do you do to collect yield, attractive yield at this point as we head into the end of the year? I think that's something that makes sense.
One line that caught my attention was this: correlated moves down. When you get them, it pays to earn the cheapest volatility. Amy, what did you mean by that? And what exactly is a trade there?
Yeah, it's a great question. So, you know, one thing I look at that when we talk about tails in the market, obviously what's going on in Europe right now, as we head into winter with what's going on with Russia, you know, a lot of people say, look, U.S. looks attractive versus Europe. However, one thing to keep in mind is when things go down, the first move always tends to be this correlated move down. So often people are sitting there thinking about ways to hedge Europe, and the actuality is, John, the best hedge is often the one that's simply the cheapest vol, because we'll get that correlated move down. So maybe you would rather be in S&P or IWM, even though they seem to be more defensive. But again, on that first tactical move, they all move the same way.
Everyone on here, Amy, and just to build on this, is super bearish. Are you saying what they're doing is slightly different when you look at downside protection and the price of it here stateside?
Yeah, here's what I would say. I think that when you look to things that'll drive volatility, right now short-term volatility is floating higher than long-term, because particularly in September and October, there are a lot of events. There's conference season, there's FOMC. And what I think is interesting is that there really isn't that demand for hedges yet. But I think as we get new information, everything's become very data-driven. People have been playing it very short-term. And a consequence of that, John, is you're not going to see how concerned people are, how they truly are, until it's sort of only a few days before, because of what's happened with the path of the S&P year to date. You know, their hedges have not been working out. You've actually been better off selling puts. So the reality is you're not going to see how concerned people are until kind of 1 or 2 days before the event. It's going to be very short term.
So short dated that capture specific catalysts. Is that the advice here, right?
Yes, even if that volatility is a little inflated compared to longer-term volatilities.
Amy Wu Silverman. Amy, you're one of the best. We always enjoy catching up with you. It's been too long. Come back soon. Amy, joining us from RBC. Just noticed the 10-year through 330. Looking at 331. This is a real pop higher in 10-year yields, up 12 basis points. High of the year, back in the middle of the year, intraday out of 10-year, just short of 350, 349.65. Right now, just short of 331. That's some turnaround. We breached 331 very briefly just moments ago. So up 11 or 12 basis points on a 10-year, up about 10 basis points on a 2-year, taking out the move low we saw on the 2-year on Friday. Remember that so-called Goldilocks jobs report? I'd still call it that. That had all the flavors of Goldilocks. It came in a bit softer in terms of what you'd expect from the participation rate, higher. The unemployment rate, higher. Wages a bit softer. Payrolls growth still nicely robust. That's what you want to see, not just once, but a few more times than that. So the 2-year yield came in. I can tell you we've just replaced it with a 2-year yield going much higher by 10 basis points on a 2-year right now, 348. Coming up, President Biden making a case ahead of midterms.
The extreme MAGA Republicans in Congress have chosen to go backwards, full of anger, violence, hate, and division. But together, we can and we must choose a different path. Forward.
That conversation up next.
No one covers the world like Bloomberg.
We have to get interest rates higher and bring inflation back to our target.
33 million people have been affected by this flooding in the monsoon.
Disruption is the whole point of a strike.
With unmatched reach and resources from more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, your global business authority.
I went back and looked, and very few secretaries of state in the last 100 years, or maybe ever, have really gone back into government. So why did you want to come back into government for any issue when you've got 8 grandchildren, you've got 2 daughters, you've got wonderful family? Why did you want to come back and go through this terrible process we have in Washington of getting things through consensus and getting people to agree to what you want to do?
Because I want those grandchildren to have a future. It's very simple. We're not on a good track right now. The world is not serious enough about reducing our emissions fast enough, David. And the result is that the planet is going to continue to evolve in reaction to what we human beings are doing to it, mostly through fossil fuels. Most of the emissions that are going up nowadays into the atmosphere and are creating this increased level of energy that comes from the ocean, goes into the storms, the floods, the rain. All of it is explainable, and it's all linked to the changes we are creating on the planet. So it's very simple. I wanted to come in because I think we have a real chance now to make something happen, and I think Glasgow was a major step forward in the effort to do that.
These MAGA Republicans in Congress are coming for your Social Security. The extreme MAGA Republicans in Congress have chosen to go backwards, full of anger, violence, hate, and division. But together, we can and we must choose a different path. Forward. A future of unity, of hope, of optimism. We're going to choose to build a better America.
The President of the United States there, a few fiery speeches, addresses from him over the last week or so. Joining us now is Anne-Marie down in D.C. ahead of the midterms. Things pick up here, AMH. What are you looking for?
Yeah, the president is certainly ramping up his criticism of the Republican Party ahead of the midterm elections, Jonathan. Of course, there was that speech in Pennsylvania last Thursday, but just yesterday, he went not only back to Pennsylvania, but also to Wisconsin. You heard some of the attacks there. He is going after what he calls MAGA Republicans, saying they want to unwind some of the legislation the Democrats were able to get through, as well, like prescription drugs, lowering the price of those for Medicare users, as well as clawing back on Social Security. He took aim in Wisconsin, particularly at Senator Ron Johnson, and of course, the Democrat facing off for that seat, Mandela Barnes, is actually leading in the polls right now. But interestingly enough, something of a little bit of a habit we've seen from some of these Democrats in some of these very competitive races. The nominee, the Democratic nominee, Mr. Barnes, did not show up alongside President Biden, because what Republicans are doing is really making this a referendum on the economy and the Biden administration. But what the Democratic Party is really trying to do is tie these Republicans to the former president, Donald Trump, and these ultra MAGA, as they would call it, legislation and policies that they want to push through.
Anne-Marie, have we clarified what an ultra MAGA extremist actually is when 74 million people voted for the former president? Has he clarified that since that speech last week?
I think the president, when he uses it, just wants to encapsulate a far-right part of the Republican Party that show fealty to the former president, but doesn't exactly go through what, quote, ultra-MAGA might mean in terms of policy stances. One thing he does bring up, and he did yesterday, was he tied Senator Ron Johnson to what he had said about the January 6th insurrection and him saying that it was by and far largely peaceful. These are the types of comments that President Biden and other Democrats in these competitive states are really going to harness and go after.
Anne-Marie, good to have you back. Welcome back. AMH down in DC. Heard a little rumor also that Maria Tadeo might make a comeback later this week as well. Be good to see her too. On the S&P 500 right now, we turn negative on the S&P, down almost 0.1%. On the Nasdaq 100, down about 0.2%. Went through the bond market price action a few times this morning. I'll get back to that for you. The 2-year still high by 9 basis points. The 10-year up by 12 basis points, just short of 331 right now at 330.91. Some economic data out just moments ago. Mike McKee has it for you. Hey, Mike.
John, we started this morning with some gloom about the overall global economy, and we get some numbers that support that gloom from S&P Global. Their PMIs for services and for composite come out worse than expected. There drops. The services PMI drops to 43.7 from 44.1, and the composite 44.6 from 45. Now, S&P has been running below the ISM numbers for pretty much all of the last couple of months. We do get the ISM services number at the top of the hour. 56.7 was last month. The forecast is for 55.3. The ISM number, manufacturing number, came in with no change last month, but the underlying numbers were good. We'll see if ISM has better news for the markets than the global PMIs.
Mike, we've covered this a few times. Can you explain to all of us why we have seen that massive gap between the S&P Global PMI and the ISM index, whether it's manufacturing or services? Sometimes we see this, a big undershoot from S&P Global and then a really robust ISM. What do you make of that?
S&P has a broader business subset than the ISM numbers. ISM is basically the biggest companies in the United States, and also S&P has a lot of export business, and the export business is not good right now.
Mike McKee, thank you. Breaking down the data. Mike's going to break down the ISM, I believe, at the top of the hour. Guy Johnson, Alex Steele and the team. Looking forward to that. About 20 minutes into the session, we're negative 0.1% on the S&P. We're down about 0.25% on the Nasdaq. The data doesn't help. Let's see if the ISM confirms. This bond market move won't help either. Up 11 basis points on a 10-year to 330, on a 2-year up 9 basis points to about 348. Breaking it down for you, get you some sector price action now. We could do that with Abby. Hey, Abby.
Hey, John. Well, that's exactly right. I think that those rising bond yields, that's really pressing into stocks because, of course, as you know, in the pre-market, stock futures had been sharply higher. Now we're a little bit lower. If we break it down sector-wise, at this point, not surprisingly, we have a flip from the open. Most sectors are lower on bottom. Communication services, we'll be digging into that deeper in just a moment. Also, consumer discretionary, so some of those mega cap tech stocks. Interestingly, financials down at this point, even with yields higher. I think what really stands out the most, though, John, we have these defensive sectors, utilities, healthcare, and even real estate. Real estate's not defensive, but it's another yield-sensitive sector. So even though those stocks typically will decline when yields are higher because the dividends are less attractive, that's not the case today. Investors are going into defense. Now, if we really break down the weakness here, it is coming from some of the big cap tech names, but in China, the likes of Alibaba and other big cap tech stocks in China are sharply lower, including, as I was just mentioning, Alibaba and JD.com. That's dragging, of course, on the Golden Dragon Index, down 1.5%. And we also have, take a look at that NYSE FANG Index. That's down about 1%, really underperforming the NASDAQ 100, which is down about 0.3%, again, having to do with that weakness in China.
Abby, thank you. Some interesting moves in foreign exchange as well. Europe has just got the worst of all worlds right now, exposed to the China story that Abby's talking about, more lockdowns, and very exposed to the energy story as well. Euro dollar breaking down by 1/3 right now, 98.94. You've got to go all the way back to October 2002 to see a euro. This week, looking at sterling breaking down, almost unchanged on a session right now, 115.35. Positive about 0.1%, but it was through 116 a few hours ago, and now it's having another look at 114. Lower the session yesterday, 114.44. You've got to go all the way back to the 80s to see sterling that week. That's some of the FX price action. Equities, as I say, rolling over, down 0.2 on the S&P. On the Nasdaq, down 0.4%. Coming up, the market moving events you need to be watching. That'll be next in our trading diary. Live from New York City, this is Bloomberg.
of a push have you seen from the Kishida government in terms of green funding?
The Kishida administration has committed to doubling the amount of investments in so-called green technologies. I think we need more than just pronouncements. We need real money backing very innovative startups and innovative companies in this space.
What do you make of Kishida's new capitalism?
Well, I think his framework is reflective of the challenges that Japan society is facing, namely that growth has been present, but growth has not been, of course, evenly distributed. But frankly speaking, it's hard to redistribute income if you don't have much income to begin with. If the government and private sector can work together and collaborate to drive more innovative growth startups, that can really drive the income growth that the Kishida government needs to redistribute.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
It's not a surprise. Nobody should be surprised by this very last decision of the Russian government. We need to be prepared for a total cut of gas supply from Russia. And we have been preparing that kind of decision with President Macron, with many other member states over the last weeks and the last month. So we must be prepared, which means reducing our gas consumption. This is the first thing to do. Then diversifying our supply chains. That's exactly what we are doing now. And also trying to build for the future new energy production thanks to renewable energies and nuclear energy. So don't be surprised. We all expected that kind of decisions, and we will be prepared.
And the decision yesterday by the G7 to impose a price cap on Russian oil, how much do you think this is going to reduce the oil income, the income for Russia?
I think that the purpose is really to reduce oil revenues for Russia, because we don't want to put sanctions against Russia, and on the other side to have Russia benefiting of revenues from oil or from gas. So the idea of capping the price of oil is, I think, the right one. And the fact that the G7 decided to move on that direction is really very good news. Then there remains 3 points that must be fixed over the next weeks. The first one is, of course, to get the unanimity of the 27 member states of the EU, because if you want to change the rules of the sixth package, you need the unanimity of the 27 member states. And let's be clear, you cannot take that for granted. The second point is the outreach. We need to convince other partners outside the G7 to join that initiative, because we don't want that G7 initiative to be a Western initiative against Russia. We want this capping of oil price to be a global initiative against war in Ukraine. That's totally different. And the third point is a technical point, but a quite important one, which is how to define the level of price that might be required.
It's a difficult moment in Europe, that's for sure. From New York, issue trading diary, top of the hour, ISM services, the Fed's beige book, and a Bank of Canada rate decision on Wednesday. Plenty of Fed speak through the week. We get an ECB decision Thursday, followed by President Lagarde's news conference, and you'll hear from Chairman Powell in that news conference at the same time, just in different places on different things. From New York City, that does it for me. Equities rolling over, the euro rolling over as well. From New York City, thank you for choosing Bloomberg TV. This was the countdown to the open. This is Bloomberg.
Is there still room for Abenomics to be carried out in full in the way that Shinzo Abe imagined it?
The economic situation that Prime Minister Kishida faces today is very different from the one that Abe Shinzo was faced with when he became Prime Minister 10 years ago.
Does Japan need a new policy? Is that what Kishida has to learn, or are there parts of this that he should hold on to?
I think there are probably parts that he should hold on to. I think the main challenge which Japan faces is demography. The population is declining, rapidly aging. Women are totally underused in the labor force, especially educated women. One needs to think about increasing immigration. These are issues that Abe tried to address, but a lot more needs to be done to quote-unquote revitalize Japan.
The difference between missed opportunity and actionable intelligence. For in-house attorneys who strive to provide superior counsel and strategic advice, Bloomberg Law offers an unmatched platform of analytics tools and business intelligence. All to help improve productivity, mitigate risk, and inform decision-making. For the comprehensive platform that helps you work smarter and faster, the difference is Bloomberg Law.
Innovation, money, and power collide in Silicon Valley and beyond. Bloomberg Technology with Emily Chang. Weekdays at 5 p.m. in New York and 2 p.m. in San Francisco.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
Pepsi's Number Fever campaign in the Philippines has probably gone down in history as one of the biggest marketing disasters in history, mainly because of a human error that led Pepsi to print more winning caps than they planned. The resulting chaos caused riots, civil unrest, and even deaths. Reporting this story took over a year, and it resulted in me flying to Manila in the Philippines to meet unlucky winners and to find out exactly what happened back then in the 1990s. My name is Jeff Maish. I'm a journalist based in Los Angeles. I wrote the story for Bloomberg Businessweek about Pepsi's Number Fever campaign. The Philippines is a really interesting country. It's made up of thousands of islands. And it's also a country that's very heavily influenced by America. American culture is everywhere you look in the Philippines. They're obsessed with Frank Sinatra music, for example. They love all things America, and that extends to their love for soft drinks, Pepsi Cola, Coca-Cola. In the 1990s, it was everywhere. Pepsi and Coca-Cola were embroiled in what is now known as the Cola Wars. It was a fierce battle for market dominance. Number Fever was already a really popular promotion. It had been rolled out in America to great success. And so Pepsi decided to roll it out internationally, particularly in Asia. They thought it was the answer to their problems. They thought it could finally help them beat their biggest competitor.
Look for the winning number in Sari stores every day, also on TV, radio, newspapers. You could be a millionaire.
$1 million pesos, or $68,000, doesn't sound like a lot now, but in 1992, that was a phenomenal amount of money. You've got to remember that in the Philippines at the time, the average monthly income was about $100, so $1 million pesos was wealth beyond anyone's wildest imaginations. Number Fever caught fire in the Philippines. Kids were saving up their pocket money to buy a bottle of Pepsi. Parents were squirreling away all of the bottle caps in bags. You would walk down the street and people were going through trash trying to find discarded bottle caps. It was a national phenomenon. Pepsi boasted that half the population of the Philippines was playing it. Number Fever boosted Pepsi's sales every month from $10 million to $14 million. It had a huge impact on Pepsi's bottom line. Number fever quickly became number hysteria. Maids were being jailed for stealing their employers' winning bottle caps. There was even some murders over winning bottle caps. People were fighting in the streets over these caps. There were signs that there were going to be problems with number fever very early. Pepsi had rolled out the competition in Chile, and a garbled fax had caused some kind of problem with the winning number. They'd announced the wrong one in Chile, causing riots. There were signs that there could be big problems ahead if they didn't keep their eye on the ball. So in 1992, Pepsi decided to extend the campaign in the Philippines, and they announced that the competition would go on for a few more weeks. One night, on the television news, they announced the latest winning number, 349. The problem was, 349 had already been allocated as a non-winning number in earlier campaigns. So there were literally hundreds of thousands of bottle caps with 349 just floating around the Philippines. Hundreds of thousands of people all across the Philippines, thousands of islands, were finding winning bottle caps. 349, 349. Some people had 10 lucky 349 bottle caps. People were dancing in the streets, celebrating. They thought their problems were over. They were millionaires. It's still not certain exactly how many winners there were of lucky 349 bottle caps, but we know that Pepsi printed over 600,000 of them. Pepsi realized very early that there was a problem. Hundreds of people started arriving at their bottling plants with their lucky bottle caps. They realized something was seriously wrong. Pepsi tried to solve the problem by offering a small token donation to anyone that brought a lucky bottle cap to their bottling plant. But it wasn't enough. People didn't want just a handful of pesos. People wanted their million-peso prize. Within a year, violent protests and riots outside Pepsi factories would leave dozens injured and 5 people dead. At one Pepsi factory in the Philippines, a grenade was thrown through the window. It killed 3 Pepsi employees. Anacita Rosario was a school teacher living near Manila in the Philippines. She was one of the tragic victims of this whole thing. She was walking to a nearby store to buy some rice one day when a Molotov cocktail was thrown at a Pepsi truck in a violent protest. It bounced under the truck and exploded. It killed her and an innocent bystander who was just a child and injured many others. When I was in the Philippines, I tracked down Anacita's daughter, Cindy, and her husband, Raul. It was clear to me that they were still very upset by the whole thing. You know, a family had been ripped apart by this competition. And Raul told me that he'd never remarried. He'd told me that he'd gone to meet Pepsi executives after his wife was killed. And he was angry. He said to them, you know, this wouldn't have happened if it wasn't for you, if it wasn't for number fever. The biggest revelation from my reporting was rumors that Pepsi was somehow involved in bombing their own trucks. I found a newspaper report with a headline that said, Pepsi goons bomb their own trucks. And when I visited the MBI, the police department in the Philippines, they presented me with documents and interviews with people who claimed that Pepsi had paid them to cause riots and to cause trouble outside their plants in order to destabilize the situation and to frame the owners of the coalitions that were fighting them, to try and curry favor. I just thought that was so shocking. And of course, Pepsi denied it, but how bizarre that a company would be accused of bombing their own trucks. The contest had sparked so much anger in the Philippines because it landed at just this really weird time in the Philippines' history. It was during a crazy election that was racked with allegations of fraud. The Philippines was in a kind of love-hate relationship with America. They loved, obviously, the American aid and finances that was pouring into the country, but at the same time, they yearned for independence. They wanted to be their own country. Vicente Del Fierro was a local preacher living in Manila, and he hated the Number Fever campaign. Del Fierro thought Pepsi's Number Fever campaign was just one of the many ways that America was asserting its dominance over a third world country. He hated seeing his fellow countrymen get ripped off, in his eyes, by this huge multinational American company. He wanted justice. Del Fierro rounded up over 800 winners of 349 bottle caps, and he got them all together to sue Pepsi for over $400 million to be divided between those holders of lucky bottle caps. Del Fierro took money from some of the people who could afford it. They paid him 500 pesos to help with legal fees, but for people who couldn't afford the money, he would just represent them pro bono.
The alliance is to build up pressure on Pepsi. And so you see people marching in the streets. So we have mounted our own campaign, even in the U.S.
He flew to America and he hired two consumer lawyers here in America to take on Pepsi. He had a meeting at Pepsi's headquarters to try and resolve the problem, but he said he wanted to take it all the way to the highest courts in America. When those cases were heard in America, those courts decided that this was a problem that should be heard in the Philippines, not in America. Back in the Philippines, Del Fierro continued his case in the Filipino courts. At one stage, there were arrest warrants handed out for 9 Pepsi-Cola executives, which he saw as a big victory. We don't know if those arrest warrants were ever upheld, but it made newspaper headlines across the country. Pepsi did not take kindly to Del Fierro's campaign. They tried everything to shut him down. They sued him for libel.
My father had to attend 3 times a month for a branch 145 and another hearing for the branch 113A, also 3 times a month. Also, there was a time my father was hospital due to heart failure. Still, he had to attend the 2 branch hearing. Otherwise, for not attending, the judge will issue warrant of arrest to my father. My father passed away January 13, 2010. After staying for almost 1 year in the hospital, he died of complication due to heart failure. After the death of my father, I was inspired to do the website. PepsiCo will be remembered for what they did to the consumer in the Philippines and to my father.
When I reached out to Pepsi for comment for this story, they claimed that they didn't have access to anyone who was working at Pepsi that was around in those days. They also said that during COVID-19, they didn't have access to their documents about this, but you know, they were very careful to say that they were sorry for everything that happened, and we do know that Pepsi did try everything to try and make this right. The Pepsi Number Fever disaster cost the company millions. We know that they paid up to $10 million in those goodwill payments, but the financial effect could be much greater. After the disaster, we know that Pepsi sales dipped. They were overtaken by Coca-Cola again. Pepsi's Number Fever disaster changed the legacy of that soft drink in the Philippines forever. Some people of a certain age won't touch it. For many people, Pepsi is a taboo word. A lot of the people that I spoke to were still quite traumatized by their experience, by that experience of winning $1 million pesos, losing it, and then returning to their normal life in poverty in Manila.
When the news of the bombing came out, it was a massive story in Germany.
We are following some breaking news coming to us out of Dortmund in Germany.
It was covered by all the media outlets.
3 roadside explosions triggered at the same time last night as the coach left its hotel in the south of Dortmund.
Public figures commented on it.
We should not let them affect our life, whoever it was.
The media echo went far beyond Dortmund.
I think it was front page news in every single big paper around Europe. Everyone thought of like a terrorist attack, and people were scared that throughout the city in Dortmund there was more attacks to be happening.
Unbeknownst to investigators, just after the bomb went off and the players of the team were shell-shocked, the person who had masterminded the attack was actually sitting in the hotel eating steak and sweet potatoes. My name is Thomas Rogers. I'm the journalist who wrote the article, The Get-Rich-Quick Scheme That Nearly Killed a German Soccer Team. Dortmund is a mid-sized city in the western part of Germany in a state called North Rhine-Westphalia. And it's a former industrial city that's kind of fallen on hard times in the last few decades. It was severely bombed in the war, so the center of the city is quite stark. Some of the few high points include its soccer team.
My name is Ike Henning. I'm a reporter with Bloomberg News, and I'm a great fan of Borussia Dortmund. Dortmund fans are super loyal. On all match days, the entire city is in black and yellow. It's like a religion.
I think more than most German cities, soccer does play a very large role in the identity of Dortmund. In October of 2000, the BVB became the first team in the Bundesliga to actually go public. Salaries for soccer players in the Bundesliga have gone up very dramatically. With such high prices, they thought that by going public, they would be able to compete better with big teams like Bayern Munich.
Unfortunately, that didn't go too well. Dortmund bought too many expensive players, high wages, and the club almost went bust in 2005.
The price of their shares, it has sometimes gone up, but mostly gone down since they made that decision. So on April 11th, 2017, the team was staying in a hotel on the outskirts of Dortmund.
Match days are always special in Dortmund. Everyone is looking forward to it. The team always meets in the same hotel ahead of matches.
They stayed in this hotel in order to have a kind of neutral space before games so that they could concentrate, be sort of isolated from distractions, things like that.
Everyone was pretty optimistic. They had a chance to go really far, maybe into the finals. I was in the office and getting ready for match day. I was going to meet with a friend, a fellow Dortmund supporter, in a pub. As always, the fans are very excited about matches.
On that day, they were heading to play in the quarterfinal against AS Monaco at Signal Iduna Stadium, which is in the center of Dortmund. Shortly before 7 p.m., the players of the team boarded their official team bus.
When the bus took off the parking lot of the hotel and turned on the street, there were three detonations, 3 bombs that exploded and hit the bus of Dortmund.
3 explosions occurred close to the Borussia Dortmund team bus. The B team bus had just left the hotel. The explosions destroyed 2 windows in the rear part of the bus.
People screamed, people jumped to the